13, 7 more to come in.
Since we have two no hi to here, I rename my number, my name.
I think we'll just give another 5 minutes and wait for the participants. Then we will start the class. Is that okay?
Hello.
Hi, everyone. We have 17 as of now, that is including me and Mr. Ilango. We need 5 more people to come in. Well, let's start introducing, and I'll give a brief about the program, and I will hand it over to Mr. Ilango. You guys can hear me clearly?
Okay, so far so good.
Right, okay.
All right.
Okay, so far so good.
Far so good.
Okay, my name is Colin, and I'm representing ALAP. And together with me is Mr. Ilango. Okay, now you know that this is uh, a funded program by SME, right? So why SME has been funded this program is because they feel companies from 6 months to 10 years, 3 years, are the companies who easily get closed down because they don't know the business. I mean, they know they were running business within themselves or their family or friends. So for them to move further, are they ready to be bankable? Is a bank is interested in investing in them? Because as business we move further, we need funds to take it to the next level. So SMA has came across. They have got few companies to derive a program, and they said, okay, we need to address 6 main issues for a SME. One is finance. Because most of them, including me, when I started the business, I was just running using my bank account. Okay, money comes in, takes out my salary. What is left there, I'm happy with it. But it's not how it has to be done, right? So then I got to know, okay, it has to be done properly. Finance is a very important thing for a company,
Dia di fire.
right? Okay, and then we have corporate governance, your secretarials. In one of the things is, if you don't know your company law or your company rights, you know that your auditors or your secretary can take you guys for a ride. So you guys need to know. I mean, for us auditors or company secretary is like a doctor. We are going there and standing in front of them, right? Okay, I need to do this. So when they say, okay, this is what it has to be done, you don't have a second, you don't take a second opinion. You'll say, okay, this is what it is. We have to do it. So as a company, you need to know your corporate governance, SOPs, your financial overview. You need to know, and you need to have understanding of your sales and the proper way of doing sales and marketing. And another one is currently business is moving to online. So these are a few of the main criteria that we were asked to train all these participants, right? So everybody has 20 people, 20 participants. They have to sit for 40 hours of training, online training, and we will be coaching you guys for 6 months. After this program, we would want this is what is coming from our side. We want to see the participants at least succeed in certain level, right? We might, if you guys need a funding, SME is there to put you guys in front of funders, right? I also have 1 or 2 people who are interested. If you guys want to sit and say, I want to bring in an investor, we got them there ready. So from my side, I'm asking you guys is 40 hours of your time, for full attendance, at least 90%, yeah. We are flexible. It is this program is one of the I really want to get the new entrepreneurs to go to a next level, right? So I believe all you guys will be with us throughout the journey, 40 hours. That is going to be starting from today, and we will have weekend coachings. So you can choose. Some might say, hey, I need more coaching with Mr. Ilango. So we will put that with Mr. Ilango. Then we have Jude, who is HR and HR and corporate governance guy. You can spend that time with him. Then we have 2 other ladies, sales. We have sales trainer and social media trainer. And we have Elias. He will be doing the business tools, your SWOT analysis, TOE analysis, all this he will be handling. And we have Rizwan. Rizwan will teach you how to arrange your pitching deck or presentation. So without further ado, I will hand it over to Mr. Elengo. And anything, let me know in the chat box, right?
Hey, thanks, Colin.
Right.
Guys, you guys have anything else to ask Mr. Colin before he run away?
I'll be here.
Firstly, thank you for spending your afternoon on Monday to be here to listen to us. Okay, I believe all of you are entrepreneur, businessman, businesswoman, successful, are making money. I think the whole idea of this program today, I think SME know that you guys are making money. Okay, but are you guys bankable? You are profitable, you buat untung dah, but are you guys bankable? When we say, are you guys bankable? If you go and see bankers ke, crowdfunder ke, ataupun nak jumpa kawan-kawan minta duit untuk invest, would they invest in you? Do you have proper documentation, proper framework to present to them? Sekarang you dah buat 100,000, 1 million, esok you nak minta working capital untuk lagi 2 million nak besarkan bisnes, apa you perlu? How to make sure that your business have a proper framework, ada proper structure, you ada accounts, audited, lepas tu boleh pergi bank minta duit lagi. So that is the main objective untuk saya hari ini. Okay. I'm not teaching you guys to become an accountant. Okay, itu lama tu tau, nak jadi accountant lama. So but you guys are business people, businesswoman, businessman. So that's what we're trying to do. Okay, biar share sedikit I punya screen Okay, sebelum tu sebelum I share screen. Today kita nak break pukul berapa untuk maghrib? Tak dengar.
Berapa lama kita break? How long? How long does it take?
Decide.
I mentioned in the group between 7 to 7:30. Is it okay
Yes.
for everyone?
Yeah.
Everybody okay?
We can
Yeah, I'll be alright with that time. I'm
break and dinner at the same time.
okay.
Yeah.
Okay, so we
Yeah,
break until 7 to 7:30 macam tu
Yes. Yeah.
All right, good.
Okay, alright. No.
So I think the method of what we're going to do today is I have some material that I will share with you guys. I will explain to you guys, and you guys can stop, ask question, or put a chat in the message chat board. Then time to time we'll go to the chat board and we'll refer to the question and we'll answer and we will discuss about the questions.
So are we going to have your material?
Of course, we will share it to Colin. Colin will send it out to you guys. Whatever we see today, that's what you guys will get. And what I'll give you as well, I'll give you some templates on how to build a business plan, P&L, balance sheet, cash flow, the whole set. I'll give you one template that you guys can use. And
Thank
I think
you.
the next few days, you guys will have some Excel training as well. Maybe you can guys can learn from there on how to manipulate that template. Okay, so that's how we're gonna do.
So that means we don't need to take picture or anything, so all will be provided, right?
Yes, we'll provide. I think Colin is recording the session as well, Colin. So we will see, Colin will share the recording as well.
Okay.
Okay, anything else before we start? Okay, one thing before we start, just to get to know you guys are all businesswomen, successful businessmen, successful businesswoman, entrepreneur, correct?
Yeah. Almost reaching to it.
Yeah, that's spirit. Almost reaching to it. So, all right. Anybody's working for people beside entrepreneurs? No, okay.
No,
You can type. Oh, okay, there's one. Benjamin is working.
Benjamin.
All right, I think it's a future entrepreneur. Okay. So I assume most of you are entrepreneur or part-time entrepreneur. Okay. So you guys have a company registered.
Yes.
It's
We do have.
either sole proprietor or senang berhad. Hopefully there are people who's going to be opening a berhad, a public company.
So far listener berhad, not yet public, not
Belum
yet.
balik.
Belum lagi.
Going,
Belum
going,
lagi.
going to.
Itu yang kena masuk kos ni.
Okay. So you guys know about the company structures. Okay. And you guys have at least published your accounts?
Yep.
Okay. All right. Let me share you my material today. Can everybody see the screen now on your?
Yes, can see clearly.
Very good.
Yes, yes.
So my subject today, I think Colin have arranged about 8 of us to impart our knowledge, to share our knowledge with you guys. I'm going to talk about financial strategy. Okay, before that, can I have somebody to flag us when it's 7 o'clock for time to break?
Can.
Yep. Yati, can?
Yep, can.
All right. Sometimes I get carried away.
Yeah, you're too eager to explain to us, right?
Yes.
You might forget the time.
Yep. Okay. So this is me. I'm Elango Ponramu. I'm Malaysian. Lahir kat sini. Belajar kat sini.
Okay.
Qualification wise, I'm a CA from Malaysia. I'm an FCCA fellow, ACCA from UK. And I have an MBA from UK as well. I kerja lebih daripada 23 tahun, dekat 25 tahun dah.
Good, banyak pengalaman.
Okay, so my last position is I was a finance director for Southern Asia for a British multinational. Okay, so I cover India, Malaysia, Thailand, Indonesia. So this is a manufacturing firm. We deal in high-tech chemical materials. Before that, I've done a lot of stuff. Besides being a finance guy, I also has been a company director and secretary for large MNC as well. I built system. I was a regional business system manager for Asia. I built SAP system. If you guys know about this, is a ERP system. So I was part of that. I was an accountant. I worked on a factory shop floor as a quality analyst as well. I've been a consultant as well, junior consultant in audit, in consulting. And I've done credit control as well. My first job was a credit control, kutip utang. Tiap hari call customer, bila nak bayar. Okay, so I start from there. So I've over 20 years, I've done all these things. As a trainer, I've been a facilitator and trainer, I think the last 10 odd years since I become a SAP leader. So I've done a lot of in-house training and programs locally and abroad. So that's a little bit about my credential. I think I should be able to impart some of it to you guys. Hopefully we all can learn something. Okay. So today's subject is about financial capability building. So like what I said earlier is, we know you guys are profitable, but how are you going to build your financial capacity? How to make yourself bankable? okay, what we need to do.
Go by season.
Pardon?
Eh?
Is there somebody asking a question?
I don't
Okay.
think so. They did not mute him.
Okay. For me, business is like a business triangle. It's like you know, you guys familiar with a fire triangle or not? To have a fire, you need to have fuel, you need to have ignition, you need to have oxygen. Without all these three, you cannot sustain a fire. You guys agree with that? Do you know about this triangle?
Yeah.
Yeah.
Yes, I know that.
It's the same thing for business as well. You need to have entrepreneurship. That's what you guys are doing. You need to have expertise, something that you are doing, or you control of something that you're doing. And you need finances. On all these three things, which one is the easiest one? Which one you think will be the easiest one to manage, to have?
Entrepreneurship.
Pardon?
Entrepreneurship.
Entrepreneurship, you guys will have
Expertise?
Expertise.
and you guys think finance is the most difficult thing.
Yeah,
Yes, yes.
exactly.
Exactly.
Over now COVID.
I'm not the
My
finance
goodness.
background.
Okay.
Otherwise, we not attend this class lah. So
Kita tak ada background finance.
I think the easiest thing to do is to obtain finance.
Huh? Means?
Maybe you are the other way around, sir. We are the other way around.
No, because to have entrepreneurship is something inside you. You want to do something, you want to build something.
Okay.
To have expertise, you know how to do something, or you know somebody who knows something.
Yeah, already know how to do. That's why we started the
Yeah.
business.
Finance,
right?
you already have finance, that's why you open the finance, or you can go and find somebody to do finance. The expertise is something like everybody knows. You know, you need to control the expertise. If like you want to build a house, you need to know how to build a house. Not you do not know all the way along how to build a house. Something you need to go and ask somebody else.
yes, sir. I think we can buy the expertise lah.
Yes, exactly. Sulaiman's right. You have finance, you can buy expertise, you can control expertise. Okay. So entrepreneurship, you guys know. Okay. Have you guys ever tested your entrepreneurship traits? So there's this one big popular personality test, you know. They use this big 5, they call it: openness, consciousness, extraversion, agreeableness, neuroticism. Okay. You see the chart that I put on the right? The colorful traffic light charts?
Okay.
And that with some points there?
Yeah.
That is a personality trait of someone that is very successful, entrepreneur that's very successful. That was carried out on one guy called Jack Ma. Okay, so they did a test on his personality trait. That is the 5 level of skill that they come up with. I didn't put which one is which. You say one is, I think it's 10, correct? 10 over 10.
Yeah.
Do you think which one is that? Which one Jack Ma is having it the highest?
Agreeableness.
No.
Then openness should be openness.
No.
No, okay.
Extraversion.
Extraversion. He just go out there and be himself. You know, he just be on the face of people, just to sell his things, to sell his capabilities, his abilities. You know which one is the lowest that he has?
Neurotism.
Yes. He never feel down for a long time. Every time it failed, you know, he applied for Kentucky Fried Chicken job for how many times? 10 times. It was 10 people went for the interview. They choose 8 people and 9 people. He's the last person that they didn't choose. He didn't let all these things bog him down. So you guys have to try to do some reading on this big 5 and see how you guys fare in being an entrepreneur.
Okay.
This is about the expertise, like what Sulaiman said. This is the easiest part. You need to control your expertise. Even if you do not have, you can buy the expertise. But at least you need to know some of your expertise.
Sorry, sir, intervene you. Regarding the 5 traits, is there any like we can just Google it and then we can find the personality by for free or what?
Yes, it's free. It's a big reading material, but you can Google and read it.
So, okay, so the name is the Big 5 Personality Traits.
Yes.
Excellent, thank you.
And we'll just talk about business expertise. And the last one is the finance. So in finance, when you say about finance, it's a very broad term. People talk about a lot of things about finance. Okay, for me, I think a lot of people agree on this is that finance basically broke into 3 parts. You create, you invest, you manage your money. Okay. When you create, it's about raising capital. You can raise your capital to your private fund. Private fund means your kawan-kawan, your duit sendiri, your mak bapa, all that individual, whoever want to provide you fund. Institutional fund is with regards to the most popular is bank, crowdfunding, P2P, private equity, Along, jangan pergi sana. Okay, and government fund. I think nowadays there's a lot of government fund we can tap in. I think for this subject about raising capital, Colin have arranged for another person to have a session with you guys. He will talk more about how to raise fund. And when you have fund, you need to make decisions how to invest your fund. Whether you want to invest in this project or another project, how you invest that project into that project. Once you invest, you decided, then you need to manage. You need to do your accounting, you need to do your business control, budgeting, your controlling, and you have to do your risk management. Okay. So what we're going to do today is we're going to look at 2 parts of the finance, the investment part and the management part. Okay. And we will have four sections of today's class. We will learn about accounting. We'll learn about budgeting and controlling, risk management, and evaluation and decision making. Plus, you will get some sample template. Today, I'll take you through some sample templates. And after this, once you have gone through all the session, then you can select any sort of coaching that you guys want. Okay, accounting, we're just going to go through some basic accountings about financial statement, what financial statement is, who's using financial statements, what you need in your financial statements. Budgeting and controlling, we'll try to spend a bit more time into that, how to write a business plan, what you need to do in a business plan, and how do you prepare your budgets, your plan. And then once you have a business plan, you need to test your business plan. Because when you give it to a banker, they will ask you a lot of questions. What if this happened? What if that happened? So you need to have some sort of risk management overview, and you need to have a risk register. And then we'll do some evaluation on and decision making. We'll teach you about some of the tools that you can use to evaluate your investment. This is the overall for the next 3.5 hours, 4 hours. Any questions? Just a quick question. Does anybody have any prior knowledge on these subjects?
Ada tapi kena refresh balik. Macam dah lupa.
Okay, semua ada?
Ada tapi dah
Take a
lupa lah.
lot.
Ya.
Tak apa. So we'll go slow. We'll
Appreciate it. Go slow.
okay. So, but I need your feedback as well, so that kita tahu mana nak stop, apa kita nak expand, apa kita boleh cepatkan. Okay. What we need to discuss further. Okay. So the first one is about accounting financial statement. Okay. Ada orang masuk lagi kan? Okay. The first question. Why do you prepare a financial statement?
See whether our company is healthy or not.
See whether your company is healthy or not. Who want to see?
The owner, I mean the management, so that we can see whether we can survive or not. For example, we have the pandemic, so we have cash flow positive for the next 3 months. And the worst case scenario, if we don't have any income, so the 4th month we're going to collapse. So we have to release everyone. Let's say this.
Yep. Okay. I think one of the important person who use your financial statement is the owner itself. Okay. But the main thing that you need to do a financial statement because it's required by law. If you have a company and if you do not do a financial statement, you do not publish your accounts, you are liable by law. Okay, for private company, within 30 days, you need to circulate to your members. If you're a 1-person company or 2-person company, it's easy. But if you have more shareholders, then it becomes tricky. Okay. And when they say accounts, financial statements, what do you need to do? You need to have an income statement, P&L. You guys all familiar with P&L, I guess?
Yeah.
Statement of financial position, what they used to call as balance sheet. Cash flow statements. Statement of changes in equity. Notes to accounts, director statement, and auditor statements. So this is basically when you publish a financial statement to the ROC, you need all these things. And all these things can be prepared in one set of documents. How many of you have prepared this one before?
Yes, I prepared by my accountant.
Okay. Yours is Sdn Bhd?
Yes, my Sdn Bhd.
Yes. Every year you need to prepare.
Yep.
Anybody else who have prepared this before?
Tak pernah buat pun.
Tak pernah buat pun?
Tak pernah.
Bukan, tak ada masa sebab masa. Sebab I supply barang sekolah kan. Memang orang kata masa orang nak buat tu tak ada. Lepas tu apa orang kata tak pandai punya juga.
Okey, tak apa. Nanti lepasnya I akan tunjuk ada beberapa free software kat dalam on the web that you can download that can use as a system for you to record you punya accounts?
Sebab yelah barang kan macam kita supply terlampau banyak, macam 40 item kan. Jadi macam agak macam barang turun naik itu yang aduh susah kita nak record. Itulah payahnya. Sorry, I tengah drive
Tak apa.
Sambil-sambil dengar.
But kalau you tak buat account, like macam yang tadi first participant kata, you would not untung, berapa lama boleh untung. Yang kita tak akan capai apa yang SME nak. Pasal SME dia kata, you all dah profit. Memang you all dah profit. Tapi sekarang kalau you nak pergi jumpa bank nak minta lebih finance?
Finance tu
Macam mana you nak minta? Dia first dia minta bagi as you punya statement.
Yelah first statement kan. Pernah rekod tu kan. Tapi duit masuk cuma tak rekod je lah. Macam tu.
Masuk kat bank aja, kadang-kadang masuk cash tak rekod.
Yelah duit duduk dalam bank je tapi tak rekod lah orang kata.
Tak apa. Hari ni kita cuba belajar macam mana kita nak rekod benda-benda tu. Okay, so do you guys clearly understand about what is the accounts? The most important thing is 3 items. The income statement, balance sheet, cash flow statements. Are you guys familiar with these 3?
Can you give some explanation the difference between the income statement and how the cash flow statement different from income statement?
Okay, we'll go there. We'll go to each of the
sure.
later. I'll give you the illustration. Okay. So when you have P&L, profit and loss account, basically dia untuk satu period over a year. So it will calculate you punya profit daripada day 1 until day 365 on 1 year. Dia akan calculate sepanjang masa tu, dia akan kira you punya keuntungan minus you punya cost, berapa you punya profit. So it measure
macam ni, adakah barang yang kita beli termasuk dengan pekerja, duit minyak kita tu semua kita kena campur ke tu?
Semua.
Oh, I see.
You
tu kena.
Okay, dia kira you punya jualan kurang cost you punya bahan mentah tu, kurang you punya driver, you punya minyak, you punya rental, semua tu, betul dia dapat profit.
Oh, kira semua baru tolak, baru kita tahu dapat profit berapa kan?
Yeah.
Berapa?
So apa dia measure is measure you punya business performance. You untung atau rugi. Okay. Yang balance sheet dia bukan over a period. Dia pada satu masa saja. Pada akhir tahun dia akan kira berapa aset you ada, berapa hutang you ada, berapa modal you ada. So P&L dia kira will calculate your untung rugi. Balance sheet dia ukur you punya asset liability dengan you modal. So bila somebody look at your balance sheet, they know what is your value of your business. Biasa kalau orang nak beli your business, dia bukan ikut tengok you punya P&L, dia tengok you punya balance sheet. Berapa you punya asset you ada, berapa you punya liability you ada. Ingat tak dulu masa AirAsia mula-mula start, Tony Fernandez beli AirAsia untuk berapa ringgit? RM1. Dia ada 2 kapal terbang, tapi dia bayar RM1 je. Pasal dia ada banyak utang. Dia aset ada banyak, utang dia lagi banyak. Jadi dia bayar RM1 untuk bayar utang. Okey. Yang nombor 3-nya cash flow. Cash flow ni dia measure you punya apa dia? Your cash flow utilization dan capacity. You kena tahu profit tak sama dengan cash flow. Tadi yang Cik yang kata, I dapat duit buat dalam dalam bank aja. In the end, kalau you nampak dalam bank you ada 100,000, mungkin you will untung tak 100,000. Itu cash yang you ada. Untung mungkin lain. Confused tak? Faham tak?
Tak balance lah.
Okay, tak apa. Nanti I
Maksud you the cash flow tu could be come from somewhere else, not from the profit, right? It could be your loan, you take a loan from somebody, so it comes as a cash flow in your account. Am I right?
Yes, cash flow could be from somebody else, from equity. Cash flow can come from your loan. There are some non-cash item in your profit. You know, like your susut nilai harta, your depreciation, itu tak ada cash. Itu bukan cash. So that's why you need to prepare all these three items. So when you give your bankers or your lender your profit and loss, they know how you are performing as a business.
Sorry to interrupt you. Let's say when we talk about the P&L, so sometimes the P&L is we include the depreciation inside the P&L, right?
Yes.
So, but then when we talk, when we want to run the company, we are relying on the cash flow. It's not the profit that we have gotten, right?
Yes.
So that's why, what is the best way of assessing the strength of our company in order to run, you know? So whether we have to look at the profit or we have to look at the cash flow.
You need to look at all three things.
I see.
You need to have profit to able to generate cash. And you need to have cash in order to pay for your asset and your liabilities.
Okay, understand.
Okay, so that's why they say this three statement is very important and it works hand in hand. And all these three documents will be balanced.
But then you are doing your P&L in yearly basis, right? Let's say I'm practicing my company doing monthly P&L. So is it because my understanding is when we do monthly, so we know the performance of the company every month. Then we can just compare with our cash flow, whether it is the real scenario or just something like, you know, just gimmick, something like that, you know. So is it okay because everybody said the P&L end of the year, right? It's a yearly basis. So can we practice monthly? Is it correct to use monthly P&L to see our company performance, the strength of the company?
You should do your P&L, balance sheet, and cash flow on a monthly basis. If you're not doing it, you know, on a weekly or bi-weekly or daily. Some big companies, you know, we do on a daily basis.
Oh.
When I was working, we do our P&L. Every day I look at my P&L and I look at my cash flow and see how much cash flow I have, whether should I keep or should I invest or should I go and borrow some more.
Actually, I'm doing that daily, but my accountant will do it monthly.
Yes, it's fine. Because on the daily one, you don't need to know a lot of details.
Yes.
When it comes to monthly one, you need to make sure that it's all correct. When it comes to yearly one, you have to make sure it satisfies the auditor's requirement.
Okay.
Okay, from month 1 to month 12, it still give you chance to adjust if you need to adjust anything. But come to month 12, then you have to follow certain rules of accounting, certain law. That's where the accountant will do at the month end, year end. But to run a business, you have to do it on a monthly basis. Okay. Any questions? Anything else there about these three statements?
Hi, sorry. My name is Diana. I just joined. So a lot of the things discussed actually I'm not really familiar because this is like my first year running like business, right? So basically the income statement and then P&L and also cash flow statement. So these three statements, is it done all are done annually and then it's done by professional accountant or is it possible for us to do it by ourselves if we are not Sdn Bhd, if we are, for example, enterprise, is it possible to do it ourselves?
Okay. I think the general answer is you can do it yourself. Just depends on the complexity of your business. You just need to have the basic understanding of what is P&L consists of, what balance sheet consists of, what cash flow consists of.
Okay.
Okay.
Is there like a specific software or like a format for each of these statements, like a widely accepted format or something for each of these statements?
There are some basic formats for all these statements. But in the end, you guys must really understand, you as a business person, business owner, you guys own these documents. Okay, it's not prepared by your auditors, it's not prepared by your bankers. These things are prepared by yourself, and you need to be able to explain to your auditors when they ask questions. Of course, there are some standard format that you need to use. As long as you fulfill this, it's fine. Okay, you guys must always understand, you guys own this financial statement, not the auditors. Okay, the auditors sometimes they just want to make sure things are correct before they put their views on your account. Okay, we'll go through what auditors look for in your financial statements, what bankers look for your financial statements, before we go into the formats of all these three financial statements. Okay.
Thank you.
The other thing that Dana, you asked whether do you need to prepare this? No, you asked about enterprise and the Sdn Bhd.
Yeah. I mean, if you're Sdn Bhd, definitely we would have to report it like to company secretary and also for compliance, right? But what if for enterprise, do we still have to do the same?
Okay, the difference between this enterprise and Sdn Bhd for layman view is, if you have a Sdn Bhd, by law you are required to submit all these things. It's a legal requirement. Okay, if you are running an enterprise, you have a legal requirement to report your profit to income tax as a personal income tax. Income from business. Okay, when you report to income tax your business income, they need to know how much profit do you make. Okay, and you provide them the numbers, and depends on IRB, the hasil, the guys, if they're happy, they go ahead. If they want to audit, they ask you for all the documentations. Okay, the level of standard that they will ask for enterprise and Sdn Bhd, the basic are still the similar things. It just depends on the complexity of a business. If they say, I want to see your invoices, you must be able to provide your invoices, whether you are Sdn Bhd or enterprise. If I want to see your bank statement, you have to show. If I want to see your other documents, you have to show. Your expenses, you have to show. So you have to do almost a similar level of standards, either you are enterprise or Sdn Bhd.
Right. Okay.
Okay.
Yeah. Thank you.
Ada apa-apa lagi question?
How about PLT, sir? Sir?
Pardon?
PLT, public
Public companies.
limited
Private-
liability company, PLT.
Oh,
Pub-
private limited company is
no,
Sdn
PL
Bhd.
limited liability.
Yeah, it's same as
There's one more. No, sir. There's one more, which is I think PLT, if I'm not mistaken. This is between the enterprise and the Sdn Bhd.
partnership.
Limited liability, yes.
It's
No, it's
partnership.
limited liability company.
Yeah, that is almost similar as
It can be partnership, yes.
yeah. Basically, the structure for corporate in Malaysia is divided basically into, if I can put loosely, into three. Okay, one is the enterprise, where there's no separation between business and
Personal.
is sole proprietor. One is partnership, where you can have up to 20 people to share your expertise and run an enterprise. That is governed differently. The third one is a company limited by either share or guarantees. Okay, it could be private, it could be public, it could be government guaranteed. Okay, and all this, the third one is governed by the Companies Act. That's the biggest pool of the businesses in Malaysia, SME. This is what the SMEs are looking for. So these are basically the three categories of structures that we have in Malaysia or anywhere else in the world. Of course, there's a lot of other derivatives from these businesses, but these are the basics. Yang enterprise, you guys know, isn't it? Siapa-siapa seorang boleh buat. Yang partnership, normally they apply for professionals like accountants, sometimes doctors, lawyers, they all go under partnerships. And the third is the common SMEs until the private limited and public companies. Okay. Okay, just now I asked a question of who uses the financial statement and why. Okay, basically the financial statement, there are two users of two group of users, one internally, one externally. Just now somebody said the shareholder, the management, the owners, they need to use this financial statement to know what's the profit, what's the valuation, what's your performance, what's your strategy. You know, they use it to do your budget and their forecast, their internal controls, their risk management. And what we are concerned about today's subject about SME, what SME want to impart to you guys is the external user of your financial statements. We spoke about bankers, auditors earlier, correct? And who else use your financial statements? Your customers, your suppliers, and government. Okay. The customers look at your company before they want to do business with you, whether you are strong enough, whether you can continue supplying them, or your suppliers before they give you their stocks or give you credits on whatever requirements that you want. And what we are interested today is the bankers and the auditors. What are they looking for? Have you guys ever have experience talking to your auditors with regards to your financial statements?
No.
No.
Not yet. Yeah, not yet. Huge.
You guys, so most of you are still under enterprise, I guess?
Yes.
Okay. So
Mine
you guys.
is Sdn Bhd.
Okay. Sdn Bhd. Somebody, Yati, you said you are Sdn Bhd.
Yes, I'm Sdn Bhd.
Okay.
Same with another Yati.
Yeah, both Yati are doing Sdn Bhd. Have you guys been audited before?
Yeah, I
I've been to, this is my second year, and last year, yeah, we have done our audited account.
Okay.
Yeah.
How's the experience?
Wow. Wow.
Wow.
I don't know what to say in the words. Cannot give the words. But wow. That's probably my first time experience doing all this.
All right. So okay.
But luckily we got a good accountant.
Pardon?
Luckily we got a good accountant to help us lah, actually. So you don't have that headache.
Yeah. Remember what? Yeah, what happened? No, if you don't have a good accountant, your auditor is not going to become your good friend. Have you guys have experience dealing with bankers in relation to your financial statements?
No.
No.
Belum pernah minta hutang dengan bank lagi?
Belum lagi.
Okay. Asal tak move pula ni. Okay, do you guys know that there's two types of accounting? One is management accounting, one is financial accounting.
I didn't know.
Okay. So basically, management account. Do you guys ever heard about these things they said accountants always prepare two set of books. One of their own use, one is for the public knowledge.
No.
No. Okay. So basically, in accounting, there's two types of accounts that you prepare. One is financial accounting, one is management accounting. Okay. Basically, for auditors, you give them financial accounting. You prepare financial accounting. When you lodge to ROC, you give them financial accounting. Basically, it's all based on the limited information that you want to give them, based on the historical information that you want to give them. And basically, it's very finance focused. Okay. So, and when you submit to your ROC, they will publish it as a public information. Anybody can go and look at your accounts. They know how much you're making, sales, how much your gross profit going to be or have been. And they know what is your asset and liabilities, and they know what's your cash flow positions. That's all. But you don't show your management accounting to a lot of people. You have to keep that as a secret, as your competitive advantage. So it's very internally focused. And
what are the differences between two?
Pardon? Hello?
No, I mean, is it necessary to have these two, compulsory to have these two, or so what are the purpose for these two?
Okay.
I haven't done yet, I don't know.
Management accounting is something very much more detailed than financial accounting. Basically, financial accounting is a simplified version of a management accounting. Okay, if like in management accounting, you segregate your expenses into 5 types. You say rental, gaji for A person, gaji for B person, your petrol for, so you know where you are spending your money. Okay? But for financial accounting, when you want to report, you just say all cost of operations. So people would not know how much is your rental is. Maybe you're getting a rental is cheaper, so that but people wouldn't know.
But both the amount will be the same, right?
The total amount will be the same.
The total amount, yes. Sir, it's already 7 o'clock, sir. It's already Maghrib prayer.
Okay, so yes, thanks Yati for the reminder. So what we'll do is, shall we connect back at 7:30?
Okay, sure, sir.
Yes,
So
sure.
we will come back from this management accounting and financial accounting back again.
Okay. All right.
Will do?
Okay.
Okay,
Bye.
sir.
Yes.
Okay.
I'll
Right.
see you at
Bye.
7:30 then.
Okay.
Thank you, sir. See you after this.
Yep. Oh, wait. I need to share my screen. Where is... Can you guys see my screen?
Yes, yes.
Yes, yes.
Yes.
Okay. Sorry, just now earlier in our first session, I did not go and check the chat bot.
Mhm.
And I check our chat message just now. There's a few questions about, I think one is about the limited partnership.
LLP, sir.
Pardon?
LLP, limited
Yeah,
liability.
limited liability partnership. It's still, I don't know whether I explained you earlier just now, there's 3 types of structure: enterprise, the sole proprietor, partnership, and company limited by shares or guarantees. The second one is a partnership. There's 2 types of partnerships. One is unlimited partnership and one is limited partnership. The unlimited partnership is almost similar to the sole proprietor, where there's no limitation of their liabilities. And the second one is the limited partnership, is where all the partners have to take some sort of limitation on their liabilities. If kena saman, this much only is my liabilities. But they still govern under partnerships. They're not a corporations yet. If they're a company, they'll fall under the third structure, where they'll be governed by the company X. Okay. So normally the professional firms all run under partnership or limited partnerships. And normally what they do is they want to manage their risk. Their partnership, they cover with their key personal insurance for their liabilities. Are you running something on LL, something they call it LLC? Anybody else? Anybody run their enterprise with their adventures in the form of LLP?
Yes, yeah.
Oh, Jian, you are running it as LLP, is it?
Yes, that's right.
So what business you're running?
It's actually an online platform.
Okay.
Yeah.
So all your members are under partnerships?
Yes.
So yours are limited or unlimited?
Limited.
Limited.
Yeah.
So you have a set of how much liabilities that you are exposed to?
Yeah, correct. That's limited. By definition.
Yeah.
That's why we chose that.
Yeah.
So we are limited
That's the
exposure.
difference.
Yeah.
Okay. The other question that I saw on the chat board just now was about stakeholders and shareholders, whether stakeholders equal shareholders. Okay. Shareholders are people who subscribe the equity in the company, who have paid for the modal or stake in the company, who have owned the certificate of share or certificate of ownership. Stakeholder is just everybody else. It's just a wide term that used for anybody else, from the management to the employees to the bankers, to anybody that have the needs of information from your company. But it's always used interchangeably. Okay, I think maybe what we'll do in every half an hour, we'll just go back to the chat board and see if there's any questions there, and we'll try to answer or try to discuss about that. Is that okay?
Yeah.
All right.
All right.
So before we left, we were talking about management accounting and financial accounting.
Yes.
Yeah. So the main difference of management accounting and financial accounting is who use this information, who use and what it contains. The financial accountings are used by only external people. We only give information that is what is really required, and all these are historical informations, and it's all finance focused. You do not want to tell people outside about all your competitive advantage, your business secrets, if not required by the law. Management accounting is something that you use to run your business. Okay, you need to know a lot of details. You know, you need to know not only financial information, you need to know what influence the financial numbers, what is the drivers that push the financial numbers, and it always emphasizes on the future. Okay, management accounting, normally they don't talk about the past, they talk a little bit, but their main aim is moving forward. Financial accounting is just reporting, just tell them what's have happened.
Sorry, Elanga, maybe can you please put back the slide that you showed to us just now?
Do you see the slides now?
No, I can't see the slide. Anybody else? How about I can't see through my screen? Is there a slide there? I just see your face.
The slide's there.
Yeah,
Anybody
slide
else
is
can see
here.
the slide?
We can see the
slide is here.
Yeah, I can see.
Maybe I have to.
Yati, can you see the slide?
Yeah, I can see clearly. This is on the screen.
Okay.
Okay, something
Yeah.
on my phone. Okay, I can adjust it. Okay.
You have to adjust that.
Okay,
I think
sure.
ada button yang you kena tekan. Yeah.
Okay, I'll do it. I'll do it.
Okay.
If you're using handphones, you just swipe left or right.
Swipe. Oh.
Okay, I got it.
Yes,
Thanks.
because you're using
Sorry for
handphone.
disturbing you.
No, I'm not. I've never used Zoom on a phone before, so I'm not able to advise you on that.
I got it already. I got it. Thank you.
All right. Okay. So, okay, my slide's not moving now. Okay. The whole thing of today's thing is we want to make your businesses not.
我要那个柠檬椰梨酥。柠檬椰梨酥。
Okay. There are some people talking over there. Fine. Okay. The whole objective of this SME program is to make your business ready and bankable. We know that your business is profitable. We hope your business is profitable, but we want to make it bankable so that you can expand your business. Okay. When you go to a bank or to a lender, what do they look for before they give you money? And
Bank statement.
Bank statement, yeah, they will have a bank statement.
Is your business plan actually?
Okay, yep. They look for your business plan. They want to know what's the plan for future if I give you money.
The financial statement, of course, I think.
Yeah, they want to know how you perform in the past. They take your bank statement, your bank record to know your credit history. You know, they look at a lot of things. You know, basically, before they give you money, they look at your capacity, whether you can generate money to pay back or not. They look at your capital structure, how much you already invested in the business, how much asset you have. Okay, some they look at the what collateral can you put, what guarantee you can give to the banks. They want to safeguard. No, if your capital, your capacity is low, or your character, whether they look at your past record, whether you have make prompt payment to your loans or your credit card or your, you know, whatever that you use bank facilities for. If this is not so good, they ask for collateral, and they look at the general condition of the economic sector that you are in, whether the whole business environment is feasible or is good. You know, maybe 20 years ago, whenever anybody want to open a internet cafe, they got so much of option to go and ask for money. Today, it's a different story. Yeah. So it look at this situation. For us today, we will look at two things that what the banks look for: the financial statement, the complete audited financial statements, and the keyword is here is audited. So what they require, okay, and a business plan. And today we'll look at into these two subjects of financial statements and the business plan. Anything else on what the bankers look like from your experience?
What does it mean by economic sector reports? That will be done by the company or bank?
Pardon, I didn't hear you.
Okay, what does it mean? I saw in your slide, there's the economy sectors report. What does it mean?
This is something that you include into your business plan, or what the banks look at. You know, it's based on what industry you are involved now. If you are supplying into a glove manufacturers, you can easily get businesses now loan now.
I see. Okay, understand.
Okay, if you like I said earlier, if you are planning to open a internet cafe, they would think 2 times, 3 times before they want to give you a loan, because that sector is not so great nowadays. So this is what, pardon?
On the trend, it's about the trend.
About the trend, what's happening now. Okay, so this is what the banks look for from your financial statements, and normally they want it to be audited, because once it's audited, they know they can trust your bank's financial statements, and somebody have checked your financial statements. So when we say audited, what does that mean? Yeah, what does auditor does?
Sir, sorry to intervene.
Yeah.
Regarding the left cycle, this is what the prerequisite for the bank that are looking for. They are looking for collateral capacity, character, condition, capital, or what is that graph actually?
That is basically something that the banks look for before they lend out the money.
All 5?
Not all 5. They look. These are the general things that they look for. They look for, first is the capacity for you to generate money. How do they look at your capacity to generate money? They either look at your past performance, where they can look from your financial statements, or they look at your future projection from your business plan. They look at your character, whether are you a good paymaster? Do you pay loan on time? They look at your credit history. Okay. They may look at the economic situations of that industry where you are in. They will look at some economic sector report or their own investigations. They want to look at how you're financing your business right now. What's your capital structure look like? Is your company already have a capacity to produce? You already have existing money or not? Or if they think all these things are not so good, maybe they still want to give you money, they may ask for some collateral. Not necessarily they will need all these 5. These are things that they don't generally look for. Does that make sense?
Yes, clearly understood.
Can you talk about credit history? If it's other than loan, what other credit history applies to a business?
Okay, nowadays, because when they look at business, they look at who's the promoter behind the business. They want to know, they do this something called KYC. Nowadays, all the banks do KYC. Know your customers, where they not only investigate about your bank, your company, they look at the key person behind the company, the shareholder, the key management people, everything. They look at their profile, and sometimes they go and look at their credit history as well. You would have some credit ratings with the banks. They look at that. Or they use third party, if a big company, they use third party research house like DNB, Dun & Bradstreet. They use these companies specialized in creating credit histories for companies, and they include personal as well. But it all again depends on the materiality, the size of your loans.
Okay. Thank you.
The bigger it goes, the more things they do. But one thing that all banks do for the past few years is they have these things called KYC. Know your customers. This happened after become more prevalent after the Panama Gate issues. Do you guys heard about the Panama thing? Where a lot of popular people, a lot of industry leaders, a lot of entertainers, they use this company in Panama to launder their money. There was some leakage on some people did a whistleblowing. Okay. Can I move forward? Look at what auditors look for in your financial statements.
Yeah. Yes.
Okay. Just now we spoke about auditors. Okay. And somebody said their experience, wow. And what does auditors actually do? The auditors, they not come there to check and to find fault. Okay, they are not a watchdog. They are just to provide a reasonable assurance of your financial statements. That, they cannot find everything. So what they do is they do some testing, they do some sampling, and depends on the size of your business, they establish, okay, I'll just take 10 samples. if all 10 samples okay, I can confidently say your account is correct. If your business is much more bigger, they might need to take 100 samples. So it's all again depends on your maturity level. Auditors do is they come, they review all your system, they review your internal controls, they check whether is it correct, your plus minus, whether you comply to accounting principle, they verify some asset, they verify some your liabilities, if they vouch and they do some statutory compliance tests. So this is what they do, depends on your business size. The first thing they do is they establish your maturity level, then they gather the evidence based on that. They perform analysis. If required, they get third-party confirmations from your banks or from your suppliers or from your customers, whether do you actually sell to them or do you actually buy from them? And they interview with key people in the business. Once they do all these things, then only they form an opinion. They will not say 100%. They just form an opinion from all the testing that I do. I think your financial statement is true and fair. That's all they say. If they think they cannot come to this opinion, they will not say this. So all the bankers, they want to see an auditors say this on your financial statements and sign off your financial statements with this statement. Because the bankers, they or any other user of accounts, they know auditors have certain standard to follow. They need to do all the one on the left, on the left box. They need to do all the things. So when auditors put their signature on your accounts, it means they have done all these things. They're happy with what they found. So this is what auditors does. Auditors do not prepare your accounts. You prepare your account. Your account is yours. The auditor just come and check. They cannot check 100%. They just do testing. Whenever there is bigger risk they think, they do more testing. Is it clear? Do you have any question on what auditor does? Why auditors' account are important?
So usually do we hire like independent auditor, or is it part of the like if we hire accountant, it comes with the auditor package, or how does it work?
Okay. Accountant prepare accounts. Auditors check the accounts. So these two people ideally should not be the same people.
Mm-hmm. Right.
Okay, they must have segregation of duty. The person who audit cannot prepare the account. So the accounts, if you're supposed to prepare the account. If you hire an accountant to prepare your account, this accountant works for you.
Right.
Okay. And you need to hire an auditor to audit your account to give you this opinion.
Mm-hmm.
Okay, that is the concept. But normally, if you go to audit firm, accounting firm, they do both of the things together.
Yeah, yeah.
You know, and then normally they in the firm they will have people who do accounts, who do audit. They separate them in the firm itself.
Mm-hmm.
So in practice, a lot of people do that. Okay. So you can go out there and find a package as well. Not an issue.
So let's say for people like me, right, who have enterprise and not Sdn Bhd. So if you want to do the financial statement, it's not so much for compliance, but rather for reporting for tax purposes, and also to make ourselves more what do you call it, appeal to bankers or governments, for example, right? So do we also need to do audited account for enterprise as well?
If you have accounts that's not audited, the level of assurance is a bit low. It's very difficult to ascertain whether your accounts is correct or not. At least the minimum level of standard, very difficult to judge. Whether you recorded everything, whether you recorded correctly.
Right.
Because nobody check your accounts based on a standard requirement. So if you have an auditor, I know if your account's been audited, I know auditors have this obligation to do. They need to check your system. They need to check your internal control. They need to do sample testing. They need to check with third party. So I don't have to do all that thing. I know auditor have formed the information, the opinion, and I know auditors have checked that. So I can rely my decision based on the auditor's work. If you just hire an accountant, I'm not sure whether he have done all these things because he does not have to comply to any standard.
Yeah. Okay.
So if you have an audited account, it will give you more weight on your case.
Right. So how much is it usually for auditor?
It depends on the size of your business. You know, I think roughly it start about 2,000 ringgit.
Okay. Right.
But I don't know out there how much they're charging right now.
Okay.
Okay. Let me just go and check if there's anything on how do let me stop sharing first. See anything on the we have an LLP. Do we need to get accounts audited as well? Yep. Okay, let's go back to our Okay, let's have a illustration of a quick illustration of financial statements. The three statements that we're looking for. Okay. This is the scenario. You're just starting a company. You have a capital of 1 million ringgit. 500 from your own and 500 you borrow for somebody. Okay. And to start operation, you're doing some trading. Just imagine you're doing some trading business. You start your operation, you bought some stock for 500 ringgit, 400,000 you bought cash, and 100 you bought on credit. And you bought a truck as well for 150,000 just to deliver all your product. In the first year, you sold about 900K worth of product. The cost is 300,000. So you sold 600K for cash and 300 for credit. So you have staff for 100K, you pay for annual salary, and you have all your expenses as well. Okay. So basically, this is all the transaction that you have for the whole year. How would your financial statement look like? So on your left is the P&L, and your right is your balance sheet. Okay. So If you just go line by line, you said earlier you said you sold for 900, your cost is 300, and you make a profit of 600. Then you have expenses related to your sales, where your marketing and your distribution costs about 250. Then you get your gross profit of 350. Then you spend all on your expenses, about 200,000, and your operating profit you get 100,000 ringgit. So your profit is 100,000 ringgit. Is your cash flow 100,000? Just now earlier we said profit does not equal cash flow.
Yes. No.
So do you have in a bank of 100,000? No.
No.
So where you look at it, you look at your balance sheet. So you bought a truck for 150, then you have a depreciation of 20 that goes into a balance sheet as expenses. Then now your asset, basically you only value at 130,000. After 1 year of using your truck, now you say your truck is only valued at 130,000. Stock you bought for 500, you already used for 300, balance is 200, you still have stock 200. Debtors you have 300 because you sold 600 cash and 300 on credit. Okay, this is the cash balance that you have, the balancing cash. You have 570 balance. You owe people for your stock for 100,000. So your net asset is 1.1 million. And it equals to your loan. You get 500, you haven't paid your loan. Your paid up capital, your own capital, 500, and the profit that you get is 100. So it balances. Okay, so this is what you look at your profit and your balance sheet. It's a simple illustration. How do you your balance sheet and your P&L. Okay. Well, what do you guys see from here? Do you guys prepare this on a monthly basis? Do you guys prepare this, at least this P&L? Do you guys do it on a monthly basis?
Yes.
No.
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 Balance sheet?
Yes.
Yeah. I think you guys should try to do this P&L and balance sheet on a monthly basis. At least you know it. Pardon?
I do it monthly by my accountant lah.
Okay lah. At least you know your situation.
Yes.
Okay. You still have cash about 570,000. How long can you survive? You know, basically you need to cover your operating costs.
Yeah.
Whether you have sales or not, all this need to be paid. Rental you need to pay, salary you need to pay. So this fixed cost is already
230.
230.
Yes, 230.
If you got no business within 2 months, your cash would not survive for long. Because this thing is all depending on your sale. If you don't have sale, you don't need to spend this. But this one you still need to pay. So if you do it on a monthly basis, it's quite beneficial for you guys. Okay.
So I'm just curious about other people, right? Like for me, for example, our business we don't have accountant yet. So for other people who don't have accountant, so I guess you guys do this yourself monthly.
I do not know about other people. I run my own consultancy business, my training business. I got a lot of other stuff as well, and I try to do it on a monthly basis.
Mm-hmm.
Okay.
Right.
and the bankers later on our session, we will see how we use this information to analyze your business. Okay, I'll also give you a template how to build this P&L and balance sheets, and later I'll also share with you guys some of the free software that you can use that's available in the internet. Okay.
So just now you said there are three statements that we should own, right? Or we should have.
Yeah.
The first one is income statement. It's not here, right?
Profit and loss is known as your income statement.
Ah.
I'm still using the old names.
Right.
This is the first one on the left is the income statement.
Yeah, income statement.
And then
balance sheet.
Balance sheet. And the
And
third one,
the cash statement, right?
Cash flow statement is this.
Yeah.
Okay.
Okay.
Right.
Okay. These two things that you have to look at as your. You see here, you have your bank balance of 570.
Okay.
Your cash flow statement will tell you how do you get to your 570.
Okay.
Okay. So you'll say from your operating profit, you get 100K. Then you add your non-cash item, which is depreciation. So from your operation, you had 120. Okay. And this is your money that is stuck in your working capitals. You have 200,000 in your stock that is not earning money. You already pay out. Okay. Debtors. People have not paid you your money yet. Correct?
Okay.
And your creditors. Okay, I think there's something wrong there. Okay. So you have your net cash from your working capital is 400. You already have losses already. Oh, is something wrong here? Okay, never mind. Let me just check back again.
Question: why is depreciation a non-cash item to add? Yeah.
Just give me a second, yeah. This is a depreciation. You don't pay cash for this depreciation. All these items is a cash items, correct? You actually pay money. Depreciation is just a concept to reduce your value of your asset. You bought a truck for 150. After a year use, you think 20,000 of it is already depreciated, susut nilai. So your value of your trucks now, if you go out and sell, is only 130. You only can materialize it for 130. Until you materialize your truck, that 20 is just gone from your asset. But there's no cash movement yet. Got it or not?
Yep.
Because if you look at in your P&L, all the items that's related to payment of cash. Yes, money movement. any point, at one point. Depreciation is just an accounting concept. Okay?
Okay.
Here is 300, sorry. I just have something I need to do. Here is assets 300, sorry. So, okay, here. So you add back to your profit, all non-cash items. And all the money that is stuck in your working capital. It's about 400,000. And from your financing and investment activities, you bought a truck for 150, and you have your capital for 1 million. So basically your 570 comes from the net of all these things. 120 you earn from your profit from your operations, but you have your money stuck in your working capital 400, and your loan and your own money 850.
How come you get 470? 120 plus 400, then
120 minus 400.
minus, okay, 120 minus 400 plus 850.
Okay, so basically majority of your money of this one is coming from your capital.
Capital. Oh.
So
the balance of the capital. The balance of the capital, right?
Yeah, balance of capital. Your money is, your operation is not generating much money yet. And you got a lot of money stuck in your stocks and debtors. You need to go and collect. So basically, the quality of your 570, your cash balance is still your own money.
Meaning that for the past 1 year, we have invested 1 million. So the balance of the investment is 470, right?
In terms of cash.
Of cash, yeah.
Yeah. So you invested 1 million, and you have earned 100,000 from your profit, plus the depreciation 120, basically you from your sales activities.
Meaning that we have lost 430,000, right, from the investment amount that we had invested earlier.
You have not lost your money yet. You have not used your money efficiently. That's what it says.
Oh, okay.
Because you're still making a profit. Remember?
Yeah, making profit, but then we haven't have a chance to get back our investment, right?
You haven't chance to get back your investment. That's correct.
Okay.
When you do your analysis later, you will see what is your rate of returns. Basically, now you have a net asset of 1.1 million, but your profit is only 100,000. So you're making only 9%. For every 100 ringgit you invest, you're only making 9% now. 9 ringgit, roughly around that. So you need to, from here, you can see what you need to do better to increase your cash flow. Okay. If you go and collect for your debtor 300, your cash position will be much more stronger. Correct?
Yeah. If we manage to get 400, right, So meaning that we are having cash about
970.
970, yeah.
Yeah. So it's stuck there. So it's very important to see where your money is stuck, how your money you generate, how you
So
use your cash.
from the cash flow means that we are making profit, but we don't have enough cash because of our money stuck in the debtors, right? In the working capital.
Yes.
Okay.
So as your things get bigger and bigger, it become more complicated. But if you have a cash flow to summarize it, it's easier for you to tackle your issues. Now, by looking at the cash flow statement, you know, stock, debtors, these are the two things that there's 500,000 there. Correct or not?
Yep. It's good.
So you may want to put a bit more effort to collect your debtors and to sell more, or keep less stock. Okay. So basically, what you need to do is you need to prepare these 3 statements that's important for you guys. And the auditors normally audit based on these 3 statements. They say, okay, you say you have sold for 900,000. Can you show me all the invoices for 900,000? You must have a record for that. Say, or you have spent 50,000 for your rental. Can I look at your rental agreement? Can I check your bank statement whether you actually pay for this guy for 50,000? So they check that, they say they're happy with that. Maybe they don't check for 12 months, they check for 6 months, they say, okay, I'm fine. So when they have done all these checks and they sign your financial statement saying, we are happy, we think your statement show a true and fair view. When they sign the financial statement, anybody else as a user of your account, the banks or the government, they will put more trust on your accounts. They don't have to go and double check. Okay, so this how the whole framework look like. You as a business person, you run your business, you need to prepare these 3 your financial statements and get a financial statement audited by the auditors and submit to ROC. Then you can use this financial statement as a basis to go and apply for loans, the basic requirement, or to pay your tax. Another thing is, this is very important for your tax. The tax calculation is another whole big subject. You're not, there's a lot of rules and regulation in your tax, a lot of benefit and grant that you can get from your tax. Basically they say Malaysian tax about 24% is out of your profit. So you're making 100, you're paying about 24,000. But actually you can lower your tax much more than that if you have a good tax agent. Okay.
So yours, is it better that we hire a tax agent rather than filing the tax ourselves?
Yes and no, Dana. It depends. If you are an enterprise, if you really prepare your accounts, if you are comfortable with your accounts, you should be able to file yourself. But if you think the value of your tax that you're paying is quite large and there is opportunity to reduce your tax by having a professional look at your tax account, then yeah, you can hire. There's this saying, tax avoidance is illegal. Okay, tax planning is legal. Okay, So before you do anything, if you have a tax agent, they will advise you when to buy, how to position your asset or your expenditure. But if you already have an expenditure or you already have a sale, but you do not show that in your accounts, that's called tax avoidance. That will be illegal. Okay, so there's a very thin line, and tax, the IRB, they can be really tough sometimes.
Well, I have a question regarding tax. Like earlier this year, right? I mean, when I started my business, I thought because it's a sole proprietor, I mean, because it's an enterprise business, so I assumed that it means that, you know, the account is mine. So I did not take salary from my business. Rather, I just use, you know, the money from the business itself. And then I think after that, I started to join like different like free courses online. That's when I learned that actually we are supposed to take salary out of our business, even though, you know, it's we are the owner, right? So how does it work? Does it mean that I will get into trouble if I report tax like for next year, because technically I did not take salary from the business? Yeah.
No, if you take salary, like for enterprise, because there's no separation between individual and company, it's all same. They see you guys as a same legal entity. Okay, so let's say this, you have to take a salary here in this illustration, 100 ringgit, 100,000. Okay, so if you take salary from here, let's say you don't take salary, so your profit will be 200. Okay, so in your tax return, your B form, you say income from employment 0, income from business 200. Correct?
Oh, okay.
If you take a salary, say income from salary, employment 100, income from business 100. So basically come to the same thing.
Okay, but that is for your personal, right? But for your business as well, you have to report it, right?
This is because when it comes to the tax, there's no separation between sole proprietor and a business. They all look at the same individual.
Okay, right. So there's no such thing as tax reporting for the business itself, or I mean, when I'm reporting my tax, my personal BE form, that will be considered the business tax reporting as well.
Yeah, they say income from business. Yeah.
Okay.
They treat it as the same thing. Just like if you do not have a business income, it's very easy. You just say, you show them the EA form. That is the proof of your income.
Yeah.
If you say you're doing business, you have to show some account kira-kira. That's what they call.
Yeah.
So they want to see where if they're not happy, if your EA form, they just check from your employers, it ties is fine. If it's for your business, then they say, okay, maybe they want to come and audit, they come and check all these things as well. They say, oh, show me all your admin expenses, show me all your rental, show me all of your sales.
So the taxable is not our revenue, right? It's the profit, right? Our income.
Basically, at the revenue level, they tax you. At the profit level, sorry. They tax you at the profit level.
At profit level, right.
Yeah. But again, like I said, for tax purposes, there's a whole different subjects. There's a lot of rules there.
Yeah. Is it going to be covered inside our?
No, we are not covering. Unfortunately, we're not covering for today.
Oh,
okay.
Thank you.
Okay. So there's a few accounting concepts that you have to have when you're preparing your financial statements. Okay. The first thing is they said you have to be a going concern. It means when you do a business, you prepare your financial statement or you do your business as if you're going to do this business perpetually. No, you do not have an issue of this not going to go on forever. Okay. So if you have a going concern issues or your business is not sustainable for 1 year, 2 years, 3 years, you should be, the auditors will look at it and they will not be, they will put it in their statement as well, saying, I don't think this business is not going to go far. Like how the auditors give a going concern report for AirAsia during the beginning of this year. But that does not necessarily means you're not going to go under. You still have to, you can still work on it. But you as a person, when you do a business, you have to do a business on the concept that it's going to be forever. Okay. The other concept is you always have to be prudent. When you anticipate some losses or this one, you have to record it now itself, even though it's not happened yet. If you think it's going to happen, you need to record it. If you think anything that has related to losses, you have to record. If anything to do with profit, you need to think twice. Unless you're very certain it's going to come, then only you record. The level of probability must be very high. Okay. And your accounts always have to be true and fair. Okay. And the other concept is accrual. Accrual and cash basis is two different things. Okay. If you incur expenses and your revenue must match. Okay. Let's say you hire a truck to send your good for sale to another place. Okay. You sold the goods for 100 ringgit and the truck costs you 50 ringgit. So the sales already sold for 100, you already received the money, you already recorded sale, I sold for 100 ringgit. Okay. But the cost to send to the place, to your customer's place, 50 ringgit, the truck companies have not billed you yet. So it means you have not recorded it yet. So if that happened on the month end or year end, you say, I've sold for 100 ringgit, I don't have expenses, so my profit is 100 ringgit. So that's wrong. So the accrual concept is you already incur that expenses in relation to that revenue. So you must record even though you do not have even you don't have a bill for that yet or you have not paid for that yet. You create an accrual account. So in your income statement, you have to say, I have a sale for 100. I have expenses for 50 ringgit, even though I've not received the bill yet. My profit is only 50. Okay, so that is the. But then
back to accrual. Let's say we already received the invoice that we have to pay 50 ringgit. Do we need to put that under expenses or under accrual?
Expenses. If you already receive the bill,
bills,
so you put expenses, transport 50 ringgit, and I have to pay for this guy 50 ringgit, utang 50 ringgit.
Okay. So in summary, accrual means that we anticipate that we have to pay, but we don't have any proof that we have to pay.
Yeah, something like that. Yeah. Basically, your revenue must match with your expenses. You already have a revenue, if there's expenses, you must take that into account. If not, your profit will be overstated. If you do not record that, because you do not receive the bill, if you don't record, your profit will show 100 ringgit. Correct or not?
Yep.
So that's not correct. Your profit should be 50 ringgit only.
Yes. Okay.
So you put the entries there. Okay. So the other thing is period. You must have a period. When is your financial period for 1 year? Okay. Complete. You must make sure everything is there. Consistent. If you do this way, all the entries should be follow the same consistent way. and substance over form. You must really see what is the transaction for. Okay. All right. So if you go on the net, there's a lot of accounting software that is free. Okay. I put a asterisk mark there. They're free. Normally, it's not always free. The basic function sometimes is always free. But as you grow into your business or you need any other specific functions, they may charge you. I think Wave accounting is quite popular. Accounting is popular. Okay. This Buku also, I'm not sure whether there's, but I know this Wave and accounting is quite popular nowadays. Go out there and try, see, play around, and whether it fit to your business or not. Have you guys tried any of these?
No.
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 Okay. Just take note of these things and maybe later have a look. And if you need any help, just let me know. I'm not be using any of these as well.
Kalau you do have accounting software, means that no need to have accountant lah, right? So I don't know how effective the software is, you know, because the physical accountant, I think we can just talk to her or him, you know, so we can discuss. But this accounting software is like one-way communications lah. We just key in all the data, right?
Yeah,
So
you key in the data.
Maybe you can just give some pros and cons about this accounting software compared to physical accountant.
I think both go hands in hands.
Okay.
Okay. When you have this accounting software, you need first to set up the accounting software. Okay. And you need to enter all the transactions. And you have to enter correctly. And in the end of the day, it's all about you have to find a balance between cost and effort. So when you have an accountant, they would have accounting software as well, correct?
Yep.
So they enter into their accounting software. You just pay them, they'll do the work. If cost is an issue for you as a startup, maybe you want to start using this free software first.
I see.
It's all comes down to cost.
Okay.
If you're comfortable with the accounting software, if you know the accounting software, next time you can hire an accountant or entry clerks to use the accounting software. But for what I believe is for in the future, I think accounting job will be obsolete.
Yeah.
You know, there will not be need for an account, but the accounting profession will still be there because somebody need to interpret the accounts, somebody need to advise you on how to put the entries. Okay, but many years ago, accountants are just, they call a bean counter. They just take the transaction, they record and just give you the informations. Today, the accountant's job is more than that. They analyze the account, they analyze the trend, and they actively involve in the business and advise this business on how we should be moving forward. They look at your performance, current performance against budget performance, see where it's lacking, and they advise the business. That's how the accounting professional has evolved. So that's the way forward, I guess. It's no more bookkeeping. Okay. Before we move to the next topic, let me go and look at is there anything on the we have Hafiza saying Wave is easy to use. I'm using Wave. Yep, that's what I've said. I've heard. Sorry, I've never used that. Asma, yep, I'll try to relearn.
I just want to double check because regarding the PNL balance sheet and everything, I can grasp it 100% because we do not do it, we do not understand. Is there any any slot or anything that we're going to go through one by one? I mean, we're going to do it to our own company and everything. Is it like coaching or anything, or is there any specific slot for us to actually do it and submit some kind of assignment or everything? I don't know.
In this session?
In this training period.
Okay, I think for today we do not have that, but if you need some sort of coaching on this, yeah, we can arrange this sort of coachings. No issue.
We refer to you, or is there any other trainer?
This one is my subject. You can talk to Colin and we can do this coaching.
Understand? Thank you.
Okay.
Sorry, can I say something about this?
Yep.
Right. What I feel is maybe you guys can try today or tomorrow. Try to play around with a Wave or Buku app, and tomorrow you guys are going to come back to Mr. Elengo again. So you can ask questions, and if he can't finish it by that time period, we are always going to take it forward for the coaching sessions. Right. And we could put this as an assignment and also as a KPI. I mean, at least we see what we have started from where and we are ending where. Right. Thank you, guys.
All right. Do you guys want any break? I think we are behind time already. Can we just continue a little bit?
Sure, you can continue.
All right. This is about, let me share back my okay. So the next one is regards to budgeting and controlling. So, do you guys remember the earlier slide we talked about what the banks look for? They look for your financial statements and they look for your business plan. Okay, this financial statement give you the information of what you have done so far, and business plan is about what you're going to do in the future. Okay, on this section we will talk about business plan and budget and plans. Okay. Yes. Okay. Have you guys done a business plan for your business before or not? Do you guys have? Yes, Diana, yeah.
But it's not, I don't know how it's the proper way to do it, but I do business plan because I want to brief it to my team so that, everybody has the same goal and everybody works.
Okay.
The same target, basically.
Okay. Anybody else have any experience of doing a business plan?
Yeah. I do my business plan and I do it in a business model canvas.
Okay, if you have done business model canvas BMC, that's good.
Yes, BMC. Yeah.
We're going to cover a little bit of BMC later. Okay. Anybody else?
Me
I just
too.
see yesterday.
Yeah, it's okay. Go ahead.
Oh, I was saying I just learned about the first time I heard about BMC was yesterday. It was with InScan counselor.
Okay.
That was the first time.
All right. Yati, you're saying something, Yati.
Yeah, actually I have done my business plan. Then like another Yeti said that I'm using the business canvas model lah.
Okay. All right. All right. Business model is one of the tools that you can use to develop your business plan. Okay.
Yes.
But like what Diana said, a business plan is about strategic. It's about future. It's a detailed roadmap of what your company goals are and how you're to achieve that. You have plans, you have objective, and you have goals. Okay. And your business plan have to be relevant. Depends on who your audience are. A business plan for employee could be different in a business plan for an investor.
Investor.
Okay, for a bank, depends. Okay, but all good business plan need to be tested. You have to regularly revisit your business plan, make sure that it's still accurate, realistic, and detailed as possible. Okay, you have to do some risk management on your business plan. So I hope all your business plan have all these things. Okay, so these are some of the points that why you need a business plan. You need to establish your business focus. All your employees, your partners need to go into the same directions. They have to get on the same train. If you're going north, make sure all the people is on the train that's going to Ipoh, not going to Johor Bahru. Okay. Business plan is something that guide you when you start and when you grow. Yeah. When you have a business plan, you know what type of people you want on board. At least you plan ahead. Earlier I said, all good business plan will have a strategy, will have goals, milestone. This is where you keep track whether you are on the right track to achieve what you start. And for our purpose today, the business plan is something that you need for securing funding. Okay. Everybody build a business plan for many reasons, but the main thing is business plan always have to look forward. It's no point looking at the past. Okay, and there's no wrong way to write a business plan. Anyhow you write is correct as long as it's relevant in the context that you're writing. Context matter. Okay. Anybody want to add on to why do we need a business plan? You want to share? Dana, you wrote a business plan. Is there anything that you want to share that we don't cover here?
Diversify the business, sir?
Yep. When you want to start and you want to grow,
yes,
so that at least your people know where you're going, what you want to diversify into.
So I'm only familiar with business plan, like how to, as a leader, how do we lead our team to get the same vision as how, we have for the company or the business, right? But for the context that, of our course, business plan for, in order to get loans or grants or, to present to government or banks, for example, do you guys have like the template proposal, an example? Because I've never seen one. I don't know how it looks like. I don't know what's supposed to be in there. but I do plan to create, that kind of business plan in the near future. So do you have like example, for example, of that kind of business plan?
Today I'll give you an overview about how business plan will look like, and I'll cover the area of financial and the risk management sections. But in the next few days, my colleagues will be teaching about how to do a business plan, how to sample, how to do the pitching, how to present, all that things.
Okay.
Today I will try to go as detailed as possible on the financial portion of it that you can summarize and put into your business plan. Is that fair?
Yeah, thank you.
Okay. So these are the main component of your business plan. Okay. You will have an executive summary about your business. This is in relation to sell your business to a potential investor or to bank. Okay. You will have your business description and your structure, your governance, and you will tell them what you're actually doing as well, what you're selling. And you will talk about market research and the strategy. Basically, what's the condition of the markets and what your strategy is to penetrate the market. How you're going to present your market, what's your value propositions, all that things. How's your operation going to be, all your strategies that you think is best for your business. And you will talk about your management and your personnel. Who are they? The key person. And lastly, you need to provide the financial and the risk document in your business plan. Basically, what is my 5 years plan? What's my profit for 5 years or 10 years or 3 years, whatever, depends. Your balance sheet, your cash flow, and your risk assessment document as well. Basically, your risk document need to be associated with your financial document as well. Let's say, if you are doing an import-export business, you import your material and you sell it here. One of your risks is Forex. So you need to be able to stretch your financial model to see how much Forex movement will be the last straw for that break the camel for your business. How much can you tolerate? What other risks that you see in your business? How you want to manage that? So basically, the lender, before they give you money, they will do this risk assessment as well on your business. They will be asking the same questions. So if you would give them this documents, you already tell them, this is how I view the risk, and this is how I plan to mitigate the risk, and this, I think, what's the outcome going to be. So your business plan will have more weight, more chances, because they do understand you already think about all these things before you go to them. Maybe they will challenge your numbers, your risk assessment, but it's for you to defend. Okay? All right, before we go to the tools that I'm going to introduce to you guys to build a business plan, any other queries that we want to have a chat with? Any other opinions about component of business plan that you want to include?
I want to ask about it's not nothing to do with business plan, right? For example, let's say we run a business and then right now, it's COVID, PKP and all these things.
Yeah.
and your business are literally really, really bad. Example, right? And then in terms of business plan, right? Is it wise if we just now I think Puan Hayati also mentioned about diversifying, right? So is it like bad if we abandon our core business and then we, jump into totally different sector using our same business, for example? Is it something that only our business face, or is it something that a lot of other businesses face as well? I wonder.
Okay. Let me give you an example. Okay. Do you guys know Masing?
Yeah, Masing. Yeah.
Masing is a property developers. Okay. Because of this COVID economic things, the property value is very low. They're not launching a lot of properties. They're not doing a lot of good business. But what did they do? They start talking about investing in somewhere in Selangor to build a glove factory.
Oh.
So not just small businesses are doing this, big businesses also are doing this, taking opportunity of the situations. So I don't think it's a good or bad. Remember earlier in my when we start our class, we say about businesses, the business triangle, the entrepreneurships. You have Diana, I think you missed that.
Yeah, I wasn't there.
It's a business triangle about entrepreneurship, expertise, and finance. You already have the finance easy to get, expertise you need to find, you have to hire, and you need to have this entrepreneurship where you can see opportunities. It's no point holding on to a failing business just because it's already written in your business plan. If you think it's time to move on, you have to move on. Yeah. That's my view.
Yeah.
Everybody will have a different view on entrepreneurships. Okay. Sometimes they have passion about the business. Okay. But it's no right or wrong. That's my takes on that.
And then the other thing I wanted to ask, this is probably not related to business plan, but at what point do we shift our business to Senjang Berhad? Because I know that Senjang Berhad, you are, held accountable to a lot more compliance, right? Compliance to a lot of different. Do we hit a certain revenue or profit and then we move to Senjang Berhad, or how does it work?
Okay, this is again my view. Might not be a generally accepted view. I look at this from point of risk. Okay, when you have an enterprise, there's no separation of risk between you as an individual and the business. If the business go down, you go down. Whatever that happened to the business, you are liable as well. If you're doing your business size is small, where you feel you can still take that risk personally, okay, it's much more cheaper to run a enterprise. But if you think your business is getting bigger, you are doing more big businesses, and if anything happen, if anybody sue you or anything accident happen, it's going to cost you a lot more than you can afford. Then you should move to Senjang Berhad so that you can limit your risk to whatever capital that you put in.
Thank you.
Okay, so I look purely from that point of view. And the other thing is, from tax purposes also, I like to look at Senjang Berhad, because there's a lot more way to do tax planning in Senjang Berhad than in enterprise.
You mean there's more loopholes?
I'm not saying there's more loophole. There's more avenue for you to plan. There's a lot more allowable expenses in Senjang Berhad, a lot more tax benefit in Sdn Bhd, okay, you can take more money from Sdn Bhd, if I put it crudely, okay, because your dividend is only taxed one at a lower rate than your individual income tax. Okay, so that's point of view, you know. And sometimes if you want to expand your business and you want to get more partners in, there is a good time to move into a Sdn Bhd when you want to raise capital, because Sdn Bhd, you need to do a audited account, and people trust Sdn Bhd better than enterprise.
Yeah.
Okay, so that's my view. Anybody want to help in this discussion? Anybody have any views?
Sir, I look into the other, additional of what you have been told us earlier. When I moved to Sdn Bhd, because I want to secure few grants from the government, so they need the Sdn Bhd company. So because mainly I'm doing training and consultancy, so that's what make I move to Sdn Bhd.
Yeah, that's because there's a requirement for a company to have a Sdn Bhd. This company is still a company, but why do they want you to have a Sdn Bhd? Because it gives them some sort of assurance that enterprise cannot give. Mainly is your account have to be audited.
Yes, all right.
Okay, so at least somebody have done the job, the auditors have done the job for the government to check your accounts before they make any decision to give you a grant or not.
So, Puan Hayati, just now you mentioned about grants, right? So, what other like government agencies that you guys are in touch or follow closely? I know SME Corp and then InScan.
Yeah.
And do you have any other suggestions?
Okay, HRDF, and at this moment I'm handling few grant given by Penjana. Yeah, that's a few, and then another one somehow from Kementerian. There's a lot of grant from Kementerian daripada koperasi, and then wilayah persekutuan. Yeah, that mainly that I'll be working lah actually. Yes, Puan Diana.
Thank you so much. Because I'm still new, but tak tahu.
No, I am still new juga. I pun baru second year. This is my second year in the business actually.
Okay. That's good. No, if you guys have anything you want to share, we have a group chat. Please share and help out. Okay, let's move on about business plan. There's two. I'm just giving you a two approach to build a business plan. You can use a organizational chart approach, or you do a business model canvas approach. Okay. And like I said earlier, there's no right or wrong way to write a business plan, as long as you cover all the requirements, what and is relevant to your audience. Okay. So I heard some people talk about they aware of BMC. Anybody aware of chart approach?
No, it's new to me.
Okay. I think if you have businesses, okay, you must, so the first thing that you guys must do is have an organizational chart. Even though it's one person organization, but you have a proper organization chart, just write the names. CEO will be you, company secretary will be you, legal director will be you, OP director will be you, marketing director will be you, finance director will be you. At least if when you have 2%, at least you know how to divide and conquer. At least you have a structure. You have a hat. When to wear a CEO hat, when to do a marketing director hat or legal director hat. I think it's a very good approach towards business when you have an organizational chart for your business. Even though it's not filled, it's vacant, it's fine. But at least you know, I need to fill this. All these are important people that I need to hire. Maybe not today, in the future. Do you guys all have organizational chart?
Yes.
Excuse me,
Yeah.
can I interrupt you a bit? Sorry, regarding the organization chart approach, so I can see here there's a legal director, so it is some means that we have to appoint our lawyer as a director, because let's say I have my own company lawyer, for example. So do we call him as the legal director, or he is not inside the company organization at all?
You don't have to hire everybody and anybody. Okay, this organization chart is something that you need to help to build your business. If they are full-time or part-time or they are outsourced, is fine. At least you know, whenever you want some legal advice, you know, this is the guy that I can go to with. Even though he's not part of your company, you don't pay salary, but you know, I have a legal director.
No. For example, I do have my own lawyer, company lawyer. So do I? But he's not inside our. I didn't put him under our organization chart. So it is good that we put him as our legal advisor, something like that, because of course we pay him monthly basis. So can we include him, or it's not necessary to be included inside our organization chart?
I think it's no harm in putting him as a legal advisor. At least everybody knows that you have these guys.
Oh, okay. Yeah, good idea. Yeah.
Even though if it's not a direct line, maybe you put a dotted line. People say, okay, this maybe it's not a direct hire, maybe it's but you guys have it.
Okay.
Okay. So there's two approach that I want to introduce for business plan. It's not the only approach. I think for in sense of timing, let's look at these two things. Okay. Just by check of voice, anybody have done business plan using this organizational chart approach?
Never, sir.
I have done before the BMC, but I found it a bit difficult to fill in the boxes, Sometimes, it's a bit confusing.
BMC, I think, is a very new concept, maybe about 10 years ago, and it's really used by a lot of startup companies.
Yeah.
And a lot of them are using IT companies, mostly technology companies uses BMC. And a lot of traditional businesses still use organizational chart approach from what I've seen. Okay. In all my working experience, mostly I've done for my own company where I work for, we done organizational chart approach. But when I come on my own, I've started doing the hybrid between business model and organizational chart approach. Okay.
Get it. Actually, the organizational chart approach, how is that a business plan? It looks like
Okay, let's go to that. Okay, so if you see here the component of a business plan, you need to have an executive summary, you need to have a business description, the structure, the governance, the market research, management, personnel, financial risk. It's the same thing as organizational chart. Somebody is holding that responsibility in the company. Okay. So when you do a business plan, a CEO, what does he do? He do the overall business plan. He talk about the company structure, the company mission, vision, value, the management structure, the biodata of the management. He also sometimes use business model canvas, and he use all the tools, other tools, the Pastel, Porter, SWOT, This one you will have another class that just to teach you about all these tools. Okay, so the CEO or the, together with the legal director or the company secretary, they do all these things, the big overview. Okay, the marketing director, he'll be talking about the market research, analysis, competitor, marketing plan, the sales forecast. So pardon? So he come with a sales forecast. And operation director, he will plan about how to to run the operations, if it's production or manufacturing, they use the 4M method, man, machine, material methods, and he estimate the cost of the cost structure, how many people they need, how many lorries they need, or how many warehouse space we need. He run all the operations. And the finance director, he consolidate everything. He developed the budget and forecast, P&L, balance sheet, cash flow, where we're going to source, and he going to evaluate the investments of project. You see, by all these person in the organizational chart, if they do what they're supposed to do, you get a business plan ready. Do you think? Pardon?
Understand.
See, but all these people, whatever they do, you get all this main component of a business plan.
Yeah.
Agree? Anything else that I missed out here? Or you guys want to add, you want to share?
So for this business plan development in terms of organizational approach, how about like HR director in terms of the manpower and everything? So is it like just for this?
You can add another line called HR director. Then you can plan for your human resource, all the thing. Because I just put, for simplicity's sake, I put operation director, I put a 4M method, the manpower. So if your organizational structure have a HR manager, then you may want to incorporate him or her as another box. Does that make sense? Hello?
Oh, yes, yes. It makes sense.
Okay, so like I said earlier, there's no right or wrong way. It's just an approach, just to make things a bit more structured and easier for you to structure your business plan. Okay, and if you look at BMC, it's basically the same thing as well. You have all the elements of the organizational structure. Okay, you see, whatever that I shaded on yellow is about generating money. Whatever this is in white boxes is all about cost. Okay, so there is 9 boxes in your BMC. You start with your value proposition. What is your value proposition to your customers? Why they want to pay for your product? Is it new? Is it because your price is better, competitive? I'm not saying cheap. I always avoid to say cheap, because cheap does not mean good. Okay, is your quality superior? Is it because yours is the most convenient thing? So what is your value proposition? Your business, you must always find what is unique about your business. Okay, then you need to list of your clients or your client segment and how you want to reach your client segment. That's all about marketing. The client relationship is all about marketing, what the marketing director does. Okay, and the revenue stream. What's the clients want to pay? What are they paying now? Can you diversify? Is there any more new revenue stream that you can create? Okay. And on your left, it's all about your cost, who your key partners are, who's your suppliers are, if you're doing internet business, who's your developers are, who your hosting companies are, who's your contractors are. You talk about your key activities, what to do. What do you actually do? And what you can subcon to your key partners. What resources do you need? What machine do you need? How many people do you need? Do you need space? You think about all that things. And the cost structure. List all the costs and put the costs. So now we have these two, organizational approach and business canvas approach. Which one do you guys think is easier to do a business plan?
I like business model.
Pardon?
BMC.
BMC. Okay.
Can I make some, not say comments like, because look at your two options of organization chart approach and the BMC. I've done before the BMC. I think to me, when I heard about your organization chart approach, it looks like two different things, So whereby in organization chart, we are looking at the individual to plan the certain job scope, But when we look at the business model canvas, it's more on to go into detail, different item, different segments. Yeah. So I can't, to me personally, I don't see that is similar. This to me it look at different approach. When you look at when you use organization chart, you think about how every person do their job in our business plan. But when you look at BMC, we look at our revenue, how we get the revenue. It's not only, we are not targeting the individual anymore at this business canvas, business model canvas, right?
Yeah.
Yeah. So I can't relate these two business plan, two approach. To me, it's totally different. The different approach. What my understanding, I don't know about the others.
Any other comments? I agree with you. These two things, when you look at it, is totally different. It's a different concepts. Okay. And like what I said earlier, when we do this, we have to do a matrix approach. When you are a marketing director, you use a lot of these business tool models. You say in this at the CEO level, at the business level, you create a business model canvas. I always like this approach where you create a business model canvas, and at this level, you use whatever that you have created the business model and expand it further. Because business model is a very good snapshot of your whole business structure. How you're going to approach. You want to do for a pitching, for proposal, for investors, this is quite good. In 9 boxes, you are able to tell an investor what your business is, who's your customers is, and how you're going to make money and how much you're going to cost. But you need details. Revenue stream, how many much clients, what product you're going to sell, how much you're going to sell for. If I use which channel, what is going to cost me. So all other individual, they will use this business model to expand out, to provide details. That is where I see the amalgamation of these two models. If you just rely on one, you might lose on the details, but it's good for the high level, but you lose the details. Does that make sense?
Yeah. I think you are going, I mean, my conclusion is maybe we can use the organization chart first, then every individual inside organization chart, we use the business model canvas to develop their own strategy, right? Can we do that?
I would think the other way. You create a business model canvas on the bigger picture first.
Okay.
Then every section go into detail on whatever that's relevant to them.
Oh, they extract from the business canvas first, then to apply for their strategies for every departments lah.
Yeah, so that your strategy for each department is still linked to the bigger picture.
Okay.
Okay, because it's for a CEO, it's easier to create that business model canvas. So to tell everybody, this is how we're going to do. How are we going to do detail? Okay, you marketing director, how are we going to do the competency? How is our value proposition? How are we going to expand this? How are we going to reach our customers? You go and do a detailed things. And from there, create a sales forecast. I want to see how the sales forecast look like.
Yeah, it makes sense.
Okay. So everybody, the direction is still the same. Okay.
Okay, thank you.
So what is the business plan format? So a detailed plan would be for you and your team. The high level plan, maybe just the BMC is just for the investors. Or you do a PowerPoint presentation for your investors or customers or suppliers. And the most important thing, I think, to open doors is your elevator speech. Do you guys have done an elevator speech before?
No.
You guys better start. You guys are businessmen. You must have a elevator speech.
What is it? Elevator speech.
This
what is this?
Oh. Okay. Basically, this is if I meet you in a lift going up to 12th floor, we only have about 30 to 60 seconds. And you want to introduce your business to me. What would you say? What would you say to attract my attention towards your business or towards you? That is an elevator speech, just to open doors, so that to attract somebody to think about, oh yeah, maybe he can help me, maybe she can help me.
Can you give an example for that?
Okay, because I do a bit on the risk management programs, and we went to this is two things, you know. We were waiting to go into a lift, alarm rings, and I know this guy is somebody that is important in the team that I'm going to meet. So we have to take the stairs. Then I saw him, I said, hi, I'm Elango. You heard the alarm. Do your business have an alarm system to alert you when you are failing? So what alarm system? Yes, I can provide that alarm for you. I'm a risk management consultant coming to see your companies. Then that just create a talking point, just to break the ice. But he knows that what I'm doing. So you must have a speech, a quick speech, very attention-grabbing speech for your business when you're approaching people. So you need to formalize a few speeches that you can use whenever you talk to anybody new. What I did was I had a situation, I took advantage of the situations of a alarm that's ringing and say, I'm doing risk management. I can provide an alarm system for your business. So you know when your business is failing that you have this alarm system. So that's where we talk, and we spoke for quite some time. So go into Google and search for elevator speech. I think there's one class in the coming days that will talk about presentations, pitching, and maybe he will teach you about elevator speech as well. Put a mark on this subject. Make sure that you guys go and ask. This is very important. Okay, guys. Hello.
Hello, yeah, okay. Listening.
Listening.
Yes, okay.
Don't worry, we're
Are you
not
guys
sleeping
planning
yet.
your elevator speech ready?
Yep.
This is my personal advice. I think you should get some help on developing your elevator speech.
Yeah, I think you are right. We try to go for it.
Yep. And maybe we can do some coaching session on elevator speech as well.
Mm-hmm.
Let's complete this course first and see what happened there. Okay. Or budgeting process. So this is the budgeting process that typically people do. They do a sales budget. The marketing guy will do the sales budget, basically quantity times your selling price. Very simple. Then you do an operation budget, talk about all the costs, and you do your supporting budget, where you have your HR, IT, finance, and whatever else that support your business, and you do a consolidations. That's where this is your whole budgeting process and planning process that you need to include in your business plan. Simple, isn't it?
Yep.
Yep, I like that.
Looks like, but I don't.
What's that?
Looks like, but
It's very simple. When once you start doing it, it will be quite simple. You just take.
yeah, at first it looks like very hard, but once we have practice on it, it will be very easy.
Yep,
So,
yep.
that, but we'll try.
Okay, so sales budget. This is just I think every one of you guys have done your sales budget, correct? If you are a business person, you must have your sales. You must have a target for your sales for a particular period. Have you done? Who have not done sales budget before? Or do not have a sales budget?
Me.
You don't have?
Yeah, I don't have sales budget.
But
somehow we got high sales, but we don't set the, we don't put sales budget.
You have sales target.
Sales target, yes. Is that the same?
It's the same thing, it's just a different name.
Okay.
You just have to formalize it.
No.
And every month you compare how you perform against your sales target. Correct? So you have a sales target, sales budget, then you compare. I'll just try to, because we only have about half an hour plus. And this is about the factor influencing your sales budget, your internal factor, your external factor. Now you have COVID. So it take a toll on everybody, I guess, for this year, this whole year. Okay. This is example of a financial plan. You guys can see this?
Yes.
Yes, can see. Yes.
Yes, can.
This is the template that I'm going to share for you guys later. Basically, you have your P&L, your balance sheet, your cash flow, and your risk management sections.
Hello.
Hopefully, this one will help you guys to develop your financial budgets and plans. Okay?
Sir,
Yes.
so it means we must have all these four together, is it?
It's not must. Okay, it's just a template that can help you to. You need to have your three items: your P&L, balance sheet, your cash flow, and the last one I just give you a template for you to play around your playbook, just to adjust and see whether your plan makes sense or not, or if something goes wrong, what happened. Okay, just a template.
If let's say if the one we need to submit to the auditor is all the other three.
The auditor's one is just for 1 year. That's the actual.
Oh.
This is
So
for
it
your.
won't look like this for monthly.
It won't look like this for monthly, but you can use this for monthly as well if you put the numbers in.
Oh.
Later, when I share with you the Excel sheet, you can look at it. And when you have it, you can play around with it and see how does it work. But this is not for actual, this is for planning.
Oh.
Okay.
Can I ask you something regarding the last table? This, I think I can see the ROI down there. So this is meant for our business plan, right?
Yes.
So we focus our ROI. So we can do it monthly basis as well, by just filling the form, right?
Yeah.
Hello.
Hello.
Yeah, sorry about that. I think I have some difficulties on my microphone. It's a bit from the previous slide. I did ask about these multi-variables. Can you just go to the previous slide?
This one?
No, before this. Yeah, no, okay, after this.
Okay.
So on the bottom right, you can see this multi-variable analysis forecasting. What is this? Huh?
Oh, this is where you put, it's just about risk management, about your forecasting. You put a lot of variables because here you just put the basic calculation is quantity times price. Right? So price, how many components of variable in your price? Your selling price.
Okay, more on the sales price, is it, or the
Yeah.
cost price?
It's just like, it's
Both.
just you already fix a price, or there's a calculation, your forex or your quantity. So there's this multiple variable in your price. That makes sense? Hello? Hello?
Sorry, can you repeat on the multi-variable?
Okay. I'm just saying that the basic calculation to create a sales budget or forecast is just based on quantity times price. I want to sell 10 pieces for this month for 10 ringgit. So my profit is going to, my revenue is going to be 100 ringgit. Correct? So that 10 ringgit of your prices, it depends on a couple of variables. So you do, instead of 10 times 10, you put 10 times your price is consists of your cost price from in US dollars, say $2 times the forex of 1 to 5. So your calculation now is quantity 10 times 5 times 2 times 5 is 100. So what it means is when you do your analysis on your forecasting, you can adjust your variables. How if my forex goes up from 5 to 6 or 5 to 4? How does it impact my sales price? How does it impact my revenue? Understand?
In a way, yeah, I do understand. But for a company, let's say about 1 year or 2 years old, right? So which are the methods that they should focus on rather than having this multi-variable analysis forecasting?
Which method is better for you to use? I don't think there's a method that fits for everybody. I think it's important for you to keep it simple, and it's very important when you do this forecasting, you know what variable is the driver or the lever of your business. If that things goes up and down, it will affect your profitabilities. If you keep it simple, like, quantity times price, you will lose the opportunity to adjust your sales budget according to the variables. Later, when I show you the template, you can see how we play with these multiple variable analysis. I think the template that I'm going to share with you guys include variables on the sales pricing, on the growth. That will help you to develop a sales budget and forecast. Is that fair?
Yeah.
Yeah, it should be okay.
Okay. See in here, later I'll show you guys. Okay. You want to see a synopsis of the spreadsheet before we go to the next two sections, the evaluation and the risk management? Or you want to finish everything and come to, lastly, we look at the example of the plans? What would you guys like?
Finish everything first.
Finish everything first.
Yes.
All right, we'll do that. Do you guys want to have a quick break or anything for drinks? Now it's 9:35.
5-minute break, sir.
How long?
5
Okay,
minutes.
5 minutes, I think it's fair. Anybody else? Okay? Is everybody okay?
Yes.
Okay, no
5
problem.
minutes it is.
Okay. So wait. Let me check in the chat box. Is there any?
Ilango, can you go to the previous slide?
Which slide? This slide?
No, previous one. Previous one. No. After the multi-variable.
Okay, after this one. So this is just
after
talking
the multi-variable.
This is the multi-variable.
This is the one? No. After the multi-variable slide.
This is the one.
It's the one.
The forecasting.
This one. This only that after is only these 3 slides.
Okay. After this, what's after this?
After this, we are going into the evaluation and decision making.
Okay, all right. No man, just double check.
That's just going for a new chapter already.
Cool. Okay.
Okay, so we'll come back at 9:45. Oh, wait, let me check on the chat box. Is there anything on the chat box? Okay. Let me see what we have here. Wih, banyak sangat dah assignment. Okay. Template, yes, I will share the template. That template is for business planning, yeah? Oh, template equal do with? No. Template is an Excel spreadsheet. Okay. Hi, do we need to list out all the shareholder when applying a Sendirian Berhad? Joey. Okay. You don't apply for a Sendirian Berhad, you go and create a Sendirian Berhad. When you create a Sendirian Berhad, you need to allocate the shares to the Sendirian Berhad. If you only have one shareholder, that's fine, it's one shareholders. If you have 10, you have to list down all 10 shareholders in the form 24, form 49, not sure which one is which, but you have to list down everybody if they are the shareholders. Okay, we talked about the BMC. You've done the BMC just now. Multi-variable, we spoke about the multi-variable, not multi-level. I think you need to show video pop-up. I heard someone said hello many times. Okay, not sure it's that house, that Diana. What is the difference between budget and forecast? Okay. Budget is something that you do in the beginning of the year and you stick to your original plan. Forecast is something that where you look at your budget and you change the next few months according to the situations. So basically you will have one budget, one forecast, one actual. But if you're a small company, you can keep your budget and just do the actual comparison. Okay, but the budget is always your original milestones. Okay, so that you can go back and compare against it. But in the terms of preparing it, it's the same thing. Whether it's budget or forecast, it gives you the same informations. It just forecast is the latest information. Budget is just at the beginning of the period. Okay, hope is understood. All right, let's go for a break. Then we'll come back at 9:45.
question, sir.
Oh, that's good. Oh, let me get these things. Okay. Let's start on this evaluation and decision making. This is about when you have a project, when you're starting a project or you're talking about investment, and it's a technique on how to evaluate that investment or your project, whether it's worthwhile to start or to invest in. Okay, so we're going to look. There's a lot of investment appraisal techniques, but I will try to cover about 3 that is popularly used to appraise investment. Okay, the first one is this payback period. It's basically talk about how long does it take to recoup your investment costs. Are you guys familiar with payback?
Yes. Payback
Good.
period.
Okay, then we are done. The next and most popular and the most important thing is this concept called net present value. Have you guys heard about this concept? Net present value. Okay.
No, not really.
Okay. Almost all investment decisions will take into account of net present value. This is the most important thing that people look at. Okay. And the last one is just the internal rate of returns, where basically is when they say your net present value is 0, what is your rate of returns? Okay. These are basically the 3 things that all lenders, or whenever you invest into a new project, they will look at. Okay. And among all these 3, the second one, the NPV, is the most important thing. It will tell you whether the project is worthwhile or not. Okay.
Question.
Yes.
What about this after this COVID activities, right? How does the investor look at the net present value for a company to invest on?
Simple answer is still the same. Okay. The calculation of a net present value will be the same. Okay. When investors or bank look at a company, they look at all these financial appraisal informations. Especially this net present value. Even though this net present value have shown its superiority mathematically, there's no doubt about these calculations. But the decision to invest or to lend you money does not solely depends on financial calculations. Sometimes people do invest for other reasons as well. The financial value could be not great, payback could be longer, internal rate of return could be smaller, but they still want to invest, maybe because of some other factors. So it's important, but it's not the only thing they look at. Does that make sense?
All right, thank you.
Okay. Does that answer your question somehow, or?
Yes, it does.
Yeah, thanks. So what we're going to do is we need to have, this should be your basic, the first fundamental things that you look at, but then you have to factor in all other decisions, your market, your opportunity to grow, whether you're penetrating new markets or new, So there's a lot of other things that you need to look beside financial numbers. Okay. So what we're going to do here is I'm going to show you the concept behind it, why we are using this, what the merits and the demerits of all these things. And I'm going to show you how to calculate this as well. But again, you have Excel. Excel can do this, all this calculation. You don't have to do a manual calculation. And I think in my spreadsheet, I will include this as well. Okay. The first one is payback period. Payback period is very common. It's easy to calculate and understand and to apply. Okay. But the problem with payback period is it does not take into account time value of money. Anybody understand about the time value of money?
Means like 100 ringgit worth now, it will not be the same worth 10 years from now or 5 years from now.
Exactly.
It's just like inflation, I think.
Yeah.
Yep. So basically, is we are talking all this we are talking about is what is worth now is not worth in the future. So what you do normally when calculate time value of money in the NPV calculation or anything, you try to take, if you expected to generate 100,000 in 5 years time, in the year 5, what is the value of money today? Because your investment is today. You bring everything back today. So the problem is payback is it does not take account into time value of money. It just calculate how fast you recoup your investment. And it does not take into account the cash flow after your payback. Let's say if your project or your business, you estimate this investment, it can run for next 10 years. Your payback is 3 years. After 3 years, whatever the money that you generate, this payback period does not take account into. You just say, okay, your payback is 3 years, done. Okay. So it's very simple calculations. So basically it's like you have your cash flow and how fast you get back to your investment. In this illustration, is quite easy to spot. It's between 3rd year to 4th year, you already get your investment. Correct? So you just calculate between 3.8 years, you get your investment back. Any question on this?
So far clear.
This is easy, isn't it?
This one, okay, straightforward.
Yep, it's quite straightforward.
Yeah.
Okay, let's get things a bit more complicated.
Yes.
Okay, net present value. Okay, net present value is a technique that used to appraise projects, by applying some rate of interest or cost of capital, they call it, to calculate what is the value of all your cash flow today, even though you're earning it in the future. Basically, if you invest your money, 100,000, 500,000, 1 million, it is not free. If you put it in the bank, you get some money, you get some interest, but you're putting it in your business, you take risk. And obviously you want it to have more returns than what you put in the bank, correct? If you guys do not want to earn more, then you can guys just give me all your investment. I don't pay interest. Okay, like I said earlier, NPV is the most important technique in investment appraisal. Whenever you do a project, whenever you do a proposal, you must have you must have this NPV. Okay, the thing is because it consider the time value of money. It include the cash flow of different periods, because you calculate all the period of your business that you want to calculate. It consider inflation. Somebody said inflation just now. That you consider inflation using the capital cost for you, or the interest cost. And you can use the same technique to compare multiple projects. Whichever give you the highest NPV, choose that one. Simple as that. Okay. The disadvantage or demerits people say about this NPV is the calculation is quite complex. Okay. And there's a lot of assumption you need to put into calculating NPVs. And you use NPV for project longer than 3 years, 5 years, or 10 years. You don't use for if your business is just we want to do for 1 year, you don't have to do NPV. Okay. And if you really want to calculate your cost of capital, it's quite difficult. But normally people just use a simple method to take cost of capital that is higher than what is the bank lending rates. So as long as your return is higher using this cost of capital, then you should be okay. And this is how you calculate your NPV. Anybody understand this?
Ni dah macam masuk at match dah. Long time ago.
Tengok pun dah pening dah tu, sir.
Ya, dulu masa I belajar jadi accountant, masa tu kena kira semua ni. Sekarang kita pakai Excel saja. Tak apa. Tak payah tengok benda-benda susah-susah. Nanti bila kita tengok Excel, kita tengok benda ni. Okay? Tapi, but you guys understand the concept of NPV, eh? Ada any question about NPV tak?
So can I say that this NPV only apply for project more than like 2-3 years kind of projects, right?
Yes. I think it's preferable to use for a longer time project. If you are investing in a new business, you don't expect the business to only stay afloat for 1 year or 2 years. You want to run that business for a longer period. Then only you can see a profit. Or you can see your return of investment. Okay? Does that make sense?
Yes, it makes sense. Maybe.
Okay. So it's just like this. This is the simple method. See, about using Excel, you invest today $1 million. So this is your cash flow from year one, end of year, you get 120, 150, 300, 500, 600. So for the next 5 years, basically If you invest today about $1 million, you get a positive returns of 103,000. Okay. So if your NPV is more than 0, it means it's profitable. 100, you get 103. That's how you calculate. You use 10% of inflation rates or cost of capital.
Invest dekat FD ya.
So now you make two calculation. One is your project, and one if you put in the FD using the same concept. Okay, you use two NPV. Okay, you calculate and you see which one got a higher NPV, because you need to put into factor the inflation rate. Okay, so when you compare 2 by 2 projects, okay, one is your business, one in your FD, you see which one give you the bigger number. So that's what you choose. So if you go to a investor, let's say a bank, they only have $1 million to invest. You say, I want $1 million. Diana says she want $1 million. You guys all put an NPV. The first thing they do is they look at the NPV, who give the higher NPV. So they will incline towards the higher NPV. That's how investors look at investment. Apa kata anda?
But basically NPV, right, there's a lot of assumption based on what we know today. I mean, within the next few years, as time goes on, it might be different actually, right?
Yes. So what the bankers, the investor will do, they will try to challenge you on the assumptions. If you say like here, year 2, you're going to get 150,000 based on, they want to know you, how do you get to the 150,000? What's your assumption? How much sales you are doing? What is your cost? Yes. So that's why they say there's a lot of assumptions. You just have to go there and defend your assumptions. But using an NPV for an investor point of view, I can compare two projects. Even though it's different project, I can compare where I want to invest. And as a pitcher who want for investment, you need to fight for this particular cake. So that's why when you do your NPV calculation, it's very important that you have supporting for your assumptions. That's why earlier somebody asked about the multi-variable analysis forecasting. So that's why if you incorporate that into your budgeting and planning, you can come up with a more tested and reliable NPVs. Does that put it into a picture of the whole thing that we spoke about earlier? Apa kata anda? Okay, let's move on for these three things. This is the internal rate of returns. Basically, this is just another calculations to see whether your rate of returns is bigger than your cost of capital or not. Earlier, we use here for 10%. If your calculate become more than 10%, it means your project is good, feasible, and better to invest in your project and somewhere else. Okay, so this is also different calculations. Don't worry, I'll show you in the Excel sheet later. Oh, we have ratio analysis. We got about 20 minutes. I need to stop this within the next 5 minutes so that we can go into our spreadsheet. Shall I just go through fast on this and the risk management? Then we go into our spreadsheet.
Okay.
All right.
All right. So let me see. Okay. Main group of ratio analysis, there's 3 main group of ratio analysis: profitability ratios, liquidity ratio, efficiency ratios. You know about profitability ratios, I guess, the gross profit margin, operating margin, ROC or ROI, and liquidity, current ratio, asset ratio, the efficiency, the debtors days, creditors days, gearing, that sort of ratios. And who use your ratios? We are concerned about the lenders, what they're looking at. Okay. Profitabilities, like we say, it's just the quality of your returns of your profits. I'll share with you guys all the slides. You have a look, then we will come back when we do the coaching sessions. Is it okay?
Okay. We have time
Liquidity.
constraint now.
Pardon?
We have time constraint now.
Yeah, because I want to show you the templates. So because that's a bit interesting, I guess. This is liquidity ratios. Okay. How to calculate liquidity ratios, efficiency ratios. You can do a vertical compared to a horizontal analysis like this. Okay. At least you can clearly see where your business is. There are some limitations for ratios because ratios is always based on same set of data and it's always a past records. Okay, this is the. I just want to cover risk management for a while, a quick coverage of risk management. Okay. Earlier, we spoke about your financial account, your financial statements, your financial system integrity is depending on your system control, your internal documentation, and your third-party documentation. Make sure that if you're using a system, your system is all controlled. Your access is controlled. The system has a reputation. You back up all your systems, and you have a filing system for if you're doing manually. And internal documentation, you make sure you have your paperwork, your invoice, your tax submission, your payment voucher, everything's approval. And if you need to cite your asset is there to be cited. And third-party documentation is more reliable than your internal documentations. Your bank statement, vendor statement, customer confirmation, your tax payment, your certificate of ownership of your vehicle or your asset. Make sure you have all these things, and all these things are filed properly on top of your system. Okay. This is talking about control environment. So basically, this is the extension of the PDCA, plan, do, control, check. Okay. You have your control environment where you have all your standard, your structure, your processes. Then you conduct a risk assessment. You identify, assess, and manage the risk there. Once you have identified or assessed, you need to manage the risk, and you implement some control activities to reduce the risk or eliminate the risk. Then you need to communicate the activities that you do. Are you guys familiar with this concept called RACI, R-A-C-I, in your environment, in your business? Anybody knows about RACI?
No.
RACI stands for
Reliability, accountability,
yes,
and inform. Yep.
yes, responsibility, accountability, consulting, and informing. So for every task or every risk, you must assign who's responsible, who's accountable, who you need to consult, or who you need to inform. It's a good structured way to look at it. If you have time, go and read about RACIs. If you have a big team or small team, it's good to have a RACI. Then you monitor whatever the control activities that you have done or the implementation you have done, take corrective action if required. Then go back to the cycle. For a minimum control standard, I always believe there's 3 levels of defense. The first level of defense is your staff. Okay? You give them, tell them to do something, make sure they do correctly. If they do something wrong, your defense is breached. Then you have your second level of manager where you have to check on your operational level, and the third level is your management level. You see, auditor is never in your minimum control standards. Okay, they're not part of your defense systems. Okay, when in between the first level and second level, as far as possible, automate all the control, reduce manual control. When it comes to upper level, then you can have a more relaxed manual control where you have to make decisions. So that's a part of controls that you can implement. You have policy document, assurance documents, your limit of authorities, who can do what, who can sign what, access control, who can access to what document, who can authorize what, SOP and form, prepare, check, approve, and documented control. Sorry, I'm just going a little bit fast on all these things. Hopefully you guys are okay. If any question, just let me know. Is there anything?
No.
No.
This is where we talk about risk. What is risk? You know, what happens if you don't have a risk management? What's the benefit that you have for risk management? And it's the same the process. Identify risk, prioritize, action, review. How you can do the identify from top down, bottoms up, questionnaire, brainstorming, all the benefit and the advantage and the disadvantage of it, and how to write a risk assessment, and some questionnaire sample about risk management. Okay, this is grouping your risk together, is making it easy for you to track. Ownership, make sure that all the risk has an owner. And why we assess and prioritize risk. Okay, this is something that you need to do. You need to put a risk matrix based on the likelihood and the impact. This will help you to assess and prioritize what action to take on the risk, because you cannot be taking action on all the risks, but at least you know you have addressed the risk. This is a simple matrix that you can do, or this you can do a more complex risk matrix. You know, this is the severity, this is the, on your right is the impact. No, on the right is the likelihood, the bottom is the impact. And this is a sample of a risk register that you can build and you can incorporate into your business plan for the work. Okay. And when you have a risk, And what do you do with your risk? You can either treat the risk, basically you eliminate the risk, or this risk is part of your business, you tolerate the risk, or you terminate the risk altogether, basically you don't do the activities, or you transfer the risk to somebody else, or basically taking insurance. This is the 4 main big group that you can respond to a risk. Okay, so we ran risk very fast. Any questions? Anything that you guys want to learn more about risk management? Guys?
Yes.
Very fast, I guess.
We are a bit sleepy, that's why.
I think we will wait for your notes.
Okay, we'll share this one. Let me share I just want to share with you guys the template that I'm going to share with you. Can you guys see my spreadsheet?
Yes.
Okay. So this spreadsheet contains how many? 14 worksheet. It contains a playbook for you to have a dashboard for risk management. You will have your P&L projections, your balance sheet projection, your cash flow, your project evaluations. This 3 sheet is helping you to build your sales budget and your operational budget. This is example for a manufacturing business. This business, what they do is they import some raw materials, one particular raw materials from overseas. They do some batching, mixing, they bottle it and they sell it. Okay. So if you look at okay, let's go to the product list. So far they have 5 products here. Okay. And here is the raw materials that they buy. Each of the raw materials they buy, it has the size, the unit of measure, currency, forex, and cost of each products, and cost in Ringgit Malaysia. And they have a bill of material, BOM, where like to create first product, what they need. So they need 1 piece of this, 1 piece of this, 1 piece of this, 120 ml of this active ingredient. It comes with all the costs. From there, they build their sales quantity. They know for the first year is very detailed. They put all the quantities that they have. They have all the channels and all the customers that they are selling to. Okay. And they also extrapolate for the next 5 years based on their assumptions. And for price, see the price is multi-variable here. They have their markup, how much they're going to charge for packaging, for freight, for others, everything. And for next 5 years and the assumption here. This is their customer relationship management. Their cost, how much it's going to cost them. And they consolidate all their volume, everything. It's all calculated. And here where they have all their manpower, how many people they need, how much it's going to cost them. and they're supporting budgets about all the other sub budgets. They pay royalty, commissions, rental, everything. And they have their fixed asset as well. Once they do this, they have their P&L for monthly for 12 months and the next 5 years. They have their balance sheets for next 5 years, and they have their cash flow for the next 5 years. Okay, it's all balanced up. This is their playbook. This is where they look at their quality of earnings and their risk management, and this is where they are okay. So this is the summary of their profit and loss for the next 5 years. If you see, their gross profit is always about 70%. Their cost is about 50 to 61%. Is keep increasing, and their operating profit margin is reducing, but until year 5, it goes up back again. But this here, you see, why is it decreasing? Okay, and the dividend, the tax, and the ROI. So what this one do is, you can play with a lot of stuff. Let's say just now their markup is about 420%. Let's say if they reduce their markup to 300%, whatever they buy, they sell 1 ringgit to 3 ringgits. You can straight away see they're making losses already. Their business is not profitable already. Okay. So you just, if your inflation is more than 6%, 10%, how does it look? See, your margin is just dropping so much. Okay. If your growth, you're expecting growth to be 5%, 5%, 9%, 10%. That's why here is 12%. If this one also all become 5%, you see your margin, your operating profit percentage keep coming down. So when you go talk to your investors, you say, my quantity will grow year on year 5%. They're going to challenge you. Why you say 5%? You have to come up with your defense. Why you say 5%? Is it organic growth? Is it going to new markets? So your sales budget will be able to explain that, or your assumption here will be able to assume. This is your pricing. You know, if your pricing growth, you say, these guys, they say, every year I want to increase my price by 3%. And at the same time, I want to reduce my cost by 3%. So that's how they do this planning. Okay, their marketing cost, it's always been 10%. They increase for the next 3 years for 12%. When you talk to your investor, people they'll be asking why you're increasing for 12%. What is the return of you doing this? So this is how you manage your quality of earnings and do some risk management. What I'll suggest is have a look at this. Okay, this is just a sample. It's not right or wrong. Okay, and I'll share this thing with you guys. Once, if you have any questions or you want to develop something similar to for your business, you want some coaching on that, let me know. And there's some formulation inside here as well. And I think next few days we'll have some class on Excel. You might get some tips from that Excel class, and you can apply here. Maybe you can do a pivot table here and see how it help you. Okay, guys, it's getting late already. I know. You guys have been very patient and to listen to me. Hopefully we learned something today.
Yeah,
Any questions?
Yes, yes.
Learn a lot of new things today.
Don't worry, we still have some coaching session that we can get involved and learn a bit more specific things that you want to learn. Okay, any questions? Let me.
Question. Yeah, I have a question.
Yeah.
Miza here. Okay. Just wonder the what do you call this? This course I would say for 6 months, is it, or is it just like 1 month session, and how does it work?
Okay.
Is it a 1 month and 5 month coaching session?
I think what Colin advises now is this: you have a class session for 40 hours, I think. Don't quote me. Then you have 18 hours or 12 hours of coaching sessions. So whether we want to do it in 6 months time or 3 months time or 2 months, it depends on you guys. But I'll share with you guys my email, my phone number, everything. If anything, just give me a buzz. We can see how we can work together. No worries. Because I think there's a lot of knowledge sharing sessions crammed into this program. Because SME also know you guys, the most important thing for you guys is just to go out there and make money, not attending class every day.
Yeah, that's true. That planning to find the financial guy to look into this.
Yeah.
Okay. All right. For your question, it is a 40 hours training, and we have a 12 hours coaching on weekends. So plus the 6 months is a handhold coaching. You can reach out to any of our trainers in the WhatsApp group or any maybe on a phone call. I think you can reach out to them for 6 months. Coaching we will be doing on a weekend basis, which is included or part of the SME outline. The other 6 months, it's not part of them. It is from our company.
Okay.
Any other
Yeah,
questions?
Nisa, you're saying something, Nisa.
For the coaching, right, do we have like a counselor or a specific person assigned to us or our business, or is coaching like means that we have access to all of the coaches in the group?
We will have a group coaching, and after that group coaching, it is you can ask one-on-one with other coaches. It's up to you guys how you want to use them.
Okay, thank you, Colin.
Okay. Any other questions regarding the training and coaching?
Colin, we get some material. Should I send it to you and you send it out to them? So how do we do that?
You could either put it here or you can also put it in our group, whichever is easy.
Okay, will do. I'll do it tomorrow. It's time to go and sleep already. It's a long day. Hey, guys, thank you very much for spending your time here. Really appreciate you guys spending time beside your busy schedules. Really appreciate that.
Thank you so much.
Yeah. Hopefully we all learn something new. I learned a lot of things as well. Okay. If anything, just buzz me in the group, and hopefully we keep in touch. And
Sure.
next few days, these few weeks, this week, there's a lot of other classes. Just make sure that you get the most of all the counselor or the lecturers or the coaches who are conducting the class. Okay.
Okay, thank you, Elango.
All right. Thanks, Guy.
All right.
Colin,
Thank
anything
you,
else, Colin? Yes.
everyone. Thank you so much. Good night.
Good night, everyone.
Good night, everyone.
Good night.
Good night, guys.
Elango, can you stay on the line, please?
Yes, yes, I'm online.
All right, guys. Good night. Okay.
Yes, Pugu. Hello. Inilah.
Why so hard?
So hard ah.
Saya tanya aku பண்ண முடியுமா? I really don't know.
Which part is hard, Pugu?
Which part? Because accounts for me is very hard. But mathematics I can do. Accounts I really don't know. So far, this is my second year. SSM Martha second year. Never thought of doing account. And this one is really, with I don't know I can do or not.
Colin, what you told her?
Calling sorry.
இல்ல phone sorry கொஞ்சம் இருங்க எனக்கு ஒரு மினிட் கொடுங்க கொஞ்சம் இருங்க
நான் டெக்கோ செய்றேன்
என்ன business?
Deco event manager management. And then now due to COVID, ஒண்ணுமே இல்ல. So அதனால focusing on tailoring and florist.
Okay.
இந்த மாதிரி ஒரு இஷ்யூல how you want me to do the account? I don't know.
Okay. So you have not done your account for 2 years. But do you have all the records? Record எப்படி செய்யுது?
இதுதான் பெரிய கேள்வி சார் இது இல்லாம நான் எப்படி செய்யறது?
The first question is, do you put your money into your bank account?
ஏன் பர்சனல்ல போட்டுருப்பேன். I even never open.
Does not matter if you put in a personal account or anything. But I think what is important is you have to list down all your income.
Previous one?
Itu macam tak boleh lah, Moy. You must have